Alrighty, it looks like I'm live. So, looks like I'm a little bit late today. My bad, my bad. I am really upset with Biogen. What the heck? Why did it go so low? It was down to like 271 today. So disappointing. Why did that happen? Yeah, but it's going back up. I kind of disappointed. My account is kind of balanced. It's a little bit on the low side, but it's not too bad. I think Silvergate is the main thing. As long as this stays range bound, I'll be good for the month. I opened the new NQ position last night, which is doing pretty good. But then I was dumb. I bought another 25,000 USD to balance it out, and the USD sold off big time. So, but I think USD I'm gonna hold it long term because I was thinking about it. I'm like, yeah, you know what? The odds are that we haven't fully bottomed and that we're gonna get another bounce up. And then I'm gonna start accumulating USD on the way down. And then once we do a big bounce, I will sell it once again. And even if I don't sell it and I'm stuck with a bunch of USD, nothing wrong with that. It is one of the best currencies in the world. Although I do need Canadian dollars eventually. So eventually I may have to sell it at a loss. But yeah. What a shame that I woke up late. Unfortunate. I don't know what happened. Alright, let me just focus here. What do we have? NQ going up is kind of what I want because I have unlimited upside gain potential with this NQ option. Wow, it doubled. I bought it at 28 and it's at 46. It nearly doubled. I'm gonna keep it because I think just looking at all the green, I think we have a lot of upside potential overall in the markets. Yeah. Silvergate is barely down. That's really good for me. And I gotta focus here. What else do I have that might be a loser? This SPY is a loser, but I knew that was a loser. That's why I got the NQ. Q's loser. Wow, this is pretty close actually. Good thing I only got one. That's hilarious. So I am at -9 SPX delta, even though I have the NQ call. But the closer we get to my NQ strike, that option is going to be worth so fucking much. It's crazy. I was looking at the max gain potential. So like if we make it to 13,000, which isn't even that far out, I'm going to make 14K on it. But the thing is that this gives me upside gamma. So it gives me positive gamma, which is good. And the closer we get to 12,500, the higher the gamma gets. And the more my delta is going to be, which is going to be really good because NQ moves like crazy. So overall, I think I am happy with this position. It sucks that I'm kind of back holding BIIB. I don't know what happened. I didn't read up about it last night. Unfortunately, I should have. And I guess I'm paying the price for that. Let me see here. I gotta open up a few things. Stocks for a short sale? Does that mean I can get HKD? Do I really want to short HKD? That's the question. Last time I tried shorting it, what happened was the system booted me out of the trade for some reason. So I'm not going to do it anymore. I think it's a pink sheet and I get charged extra for that. So that's a shame. Yeah, do something here. Okay. There we go. This one is on. I just wanted to pull this up here. Okay. Hey Daniel, how you doing, man? Good to see you. I got on late today. So yeah. Looking good. I think my theta positions are mostly all good. Upside risk is squeezing me a bit, but I do have the NQ call counteracting all the upside risk. So not bad. If the NQ keeps going up, I can potentially make good cash on this. Let's say we have a 10% up day, which means NQ goes up by like 1100. These are going to be losers. These two are going to be losers. These are my biggest upside risks, but the NQ is going to be such a winner that it's going to make up for that. Now, if we have an upside day, Silvergate should also be up, so those will be winners. I feel like I'm properly hedged. I think the minus 9.2 doesn't tell the whole story because of how much gamma I have here. And because these are ratio spreads, they don't have as much gamma. Okay. My biggest regret is getting Biogen on Friday, but it looks like it's bouncing. I think it's still squeezing out the people who are paper handing it, people who are levered and such. Let me look at the Fed funds rate, see what's going on there. So these are up, that's bullish. Yield is down barely. If this yield goes down like another 2-3%, the NQ should go nuts. Bed Bath and Beyond is up 3%, 35%. Crazy stock. Looks like it was a short squeeze. I wonder if I should try to short this and be crazy. Maybe I can do like 200 lots or something. Let me configure the preset. I'm going to try to intraday short this. Let's do BBBY. I'm sure they have shares. Too many apes out there. Let's do 200, then every 10 cents is $20. If I do 500, every 10 cents is $50. Then I can cash $50 out at a time. Looks like we're near the high of the day. So let's pop one in. Okay, 179. See what happens. If it goes up 10 cents, I'm down $50 on that. US dollars down. I bought another lot. I bought another 25,000 USD and it's down, which is a shame. Like I said, I'm gonna keep the USD as long as I need to. Oh shit, it's going up. See if it squeezes me out. It's only $50 every 10 cents, so not the end of the world. Okay. I gotta keep an eye on that though. I don't want to get squeezed out. What else do we have? We have Tesla 122, decent. What are my Tessie positions like? You know what? I didn't take a screenshot for 7 a.m. Let me take my screenshot now. January what? January 9th. I'm off my game today. It's funny, I was looking forward to this so much last night. I'm like, yeah, I can't wait to start my trading day tomorrow. It's been a kind of a long weekend preparing for it. And then I freaking get up an hour late. Okay, so these positions, let me see the BABA. The interesting thing about the BABA is I am approaching max gain territory. Show you the way we've been progressing with BABA. See, max gain is at 135 and BABA's been going up steadily, so that's looking good. The other BABA position is fine because that's way up. way up there in terms of strike prices. This one, Tesla. This is the one I opened, I think last week. Yeah, so it's a 90-85 short ratio spread. So this has a decent max profit if we hit down to 85. If we pin it by January 20th, nice 1,000 profit. So this is basically starting to become a free put soon. Actually, you know what I can do? I can close the extra put and then keep the debit spread. But I'm not going to do that because Tesla can keep going up. I don't want to lose on a debit spread. It could squeeze for a while. Too many shorts in it. Nvidia's good. I feel like, you know, part of me feels like I should just stick to ratio spreads. Because if you look at my biggest loser, they're all either short puts or positions that I try to like scalp. Or yeah, scalp. My ratio spreads are all like under control, but then again, the gains are also relatively limited. Hey, this one doesn't even have a bid or an ask. Let me see if I can get rid of it for a penny. If I can get rid of it for a penny, I might, just to free up buying power. And let's see, and also make it so that I don't fall for like a black swan event. That way I don't have to worry about a black swan here. 308 USD. The commission is insane though. 240 commission. I might just keep this, you know what? And then just prevent myself from ever opening such a big one again. That's a few hundred US dollars that I can definitely use. US dollar keeps going down. That is nuts. But that usually means NQ should keep going up. Let's take a look. Bed Bath and Beyond keeps going up. Where's the NQ? Yeah, 358. So my NQ position is going to look better and better. Ugh. All right. What else? What else? What else? Everything else is looking pretty good, pretty stable. Queen is up a nice amount. I should have just doubled down on Queen instead of Silvergate, maybe. But Silvergate's not bad. The premium should get destroyed soon. You see, this one went down by 5 cents. This one is still a little bit elevated. But what I might do is just not open positions for a few days because I have been... where's BBBY? Hold on, did that close? I went short, right? Did it not show up? Did it not let me keep it? It closed it for me. What the fuck? I don't know why it does that. RATS? IBKR RATS? I don't know. Maybe it doesn't allow me because of margin. Weird. So I closed that for a $5 loss. I don't know why he does that. Maybe because it's a meme stock, there is a very high amount of margin required. I don't understand that. Let me change the presets again. Maybe I'll change it to like 200 shares. Last time I tried shorting HKD, it did the same thing. I don't even know why it's pumping. It's such a shit company too. whatever. Let's forget about that. IBKR doesn't want me to short for some reason. Probably because I'm using too much buying power. Let me monitor the NQ. Okay, so Silvergate's good. Silvergate went up to 1260 today. That is crazy. Premium should start getting crushed here. And the thing is that I'm not even down that much. Just my PNL, my total net value is down a lot because these accumulate as well as the USD. But my Silvergate isn't too bad. It should end up being very profitable if we stabilize within the couple of weeks. But I was reading some kind of bearish stuff on it on Twitter about like the amount of money it lost when it sold those assets, those treasuries, is more than the amount they've made in 10 years of existence. It just looked really bearish. I'm like, wait a second, that's not a good sign. Then I was reading about like a lot of the managements are like they're hired through nepotism. Like a lot of them are like the son-in-law of the CEO. That's usually a bad sign. I was listening to somebody talk about it. It's not like, doesn't mean automatically that it's a crap company. It could just mean that, there's a family that has a lot of like business acumen and they all, worked on the same project. So it doesn't automatically mean that it's fraud, but there is a higher likelihood of fraud when, relatives are all hiring each other inside a company and they're all like making a killing in it and they don't care about shareholders and such. So there is a chance, right, that fraud's happening. SI $5. Yeah, $11.95. My SI hedge should be helping. Actually, it's barely probably breaking even. So I can't complain about that. Let me see. I was going to open an SI hedge, another hedge that's going to work differently. So January 20th, I was going to do like let's say something like this, okay? 11.5 and 11 put spread, okay? It's only 20 cents to open. And then I can open 10 of them. So the reason I want to do this maybe is that if we rally, okay, a little bit, I can sell the put side of the spread for profit and then keep the long side. And then that's going to make me more confident to keep this through earnings, because then I'll have like a kind of a big hedge in case we sell off. So let's say I buy 10 of these. It's only going to be $200 plus commissions. And then it's going to give me an extra potential, if I sell the put portion of it, an extra potential $1,000 for every dollar strike. We get closer to 7.5 up to like 3 or 2,000 up to like 6,000-ish. So that could be a potential play here for SI. I'm already short 150 shares though, and we may not rally for me to take this as a profit. And if we don't, then the max gain will only be 30 cents. So $300-ish. Yeah, $300. It's expensive. 20 cents out of 50. Yeah. Or I can just wait till it rallies more. NQ's already up 2%, but Silvergate is barely up. That's a shame. The IV is still very elevated on Silvergate. It's at 11.52. That's really, really high. No, 11.32. And part of it is because earnings is coming up, right? IV is going to remain elevated, but Theta should have an effect on these far to the money ones. This one went down quite a bit. This one was at like 17 cents last week, which was ridiculous. Let's see what else I can do in terms of like a small hedge. So if I do, let's say January 20th, let's take a look here. Let's go 14 and 13. Okay, so that's $1 wide. I get 65 cents. 68 cents for $1 wide. NQ selling off. Dollar's going up. Things are balancing out. I gotta follow some kind of news. I feel like I'm a little bit confused. Let me check Twitter as to what's going on here today. There was 2 reports today. Let's see. Today we had the building permits and consumer inflation expectations. That's coming in 1 minute actually. Consumer inflation expectations. Let's take a look here. Okay, keep an eye on that right now. Okay, consumer inflation expectations, and we take a look at the price action because of that. Is it 8 o'clock yet? So consensus previous 5.2. Let's see if it goes down, what happens? If it goes up, what happens? This might be a market mover because it's going to determine how much inflation the market's pricing in. I didn't get my update. It is 8 o'clock, so where's it at? Yo, Sir Wizzle, how you doing? You wanted to remind me? Thanks, man. I have a small calendar now. I'm not going to miss anything this week. But I'm not getting it. Have you guys gotten it? Let's see. I don't see much change in price action. Maybe everybody's waiting for it. I'm happy my net val is stabilized because it was falling like a rock late last week. That was annoying. I'm still really close from my all-time high because on December 31st, I took out $2,000 to pay some of my bills and I was at 405.3. So this is pretty close. Although I was way up last week and I didn't take profits on Silvergate. Still kicking myself about that. But it's gonna balance out, hopefully. I don't want to be long anything, especially not Silvergate. So hopefully I find a good exit strat without too much pain. I still didn't get it, eh? Okay, here, 5%. So that's barely down. That's not going to move the market. So that means inflation is still elevated. This might actually be seen as bearish. The fact that inflation is still elevated. Make my mouse faster. Okay. Let's see. What else can I look at? Let me open up Bloomberg here. Hold on, it's gonna be loud. Okay, that's good. Oh wait, that's was that NBC? Wait a second. Oh, here. China, yeah, China was the big news actually. That's why Baba went crazy. So what happened was China announced a lot of like stimulus building. They're gonna build railways, they're gonna build airports, they're gonna build this and that. So maybe China's ready for a boom. But I was also looking at some really bizarre videos in China of like increased government control of society. Like they have like facial recognition everywhere for people entering buildings. It's kind of dystopian. That might affect overall productivity. If people feel like they're being squeezed out of their privacy and shit, it might not be good for the country. People might flee. You might see a brain drain. Because luxury stocks, eh? 52-week high, crazy. Because China, even though it's like an authoritarian communist regime, people have been, in some ways, other than like Xinjiang or Tibet, people have been relatively, in a lot of ways, like free, except for like arts, also, like, musicians and movie creators, they're all like influenced by the state. And online discussion is also really, really influenced by the state. So, like, it's been relatively free, but for the Chinese government to impose like draconian measures, it might have a negative effect. Because there is like the Han Chinese, and they're not gonna get squeezed as much by the government because they're like in the in group. But then there's a lot of ethnic minorities that are maybe gonna start fleeing the country and whatnot. But you never know. It's a huge country. But any country with brain drain and population loss doesn't do well. And they're already on a decline in terms of their projected decline in terms of population long term. But that's a long term issue, right? Not short term. So I want to look at this again, see my winners and losers. So we have BIIB going back up. I can't believe I bought it. I may just close it once we get closer to my purchase price. That's not something I ever do. I think I'm being... So it went down last time, right? So it must be bullish then. You're talking about China? I forgot. So, yeah, this is something I never do. I think it's just I'm influenced because I'm streaming. I'm influencing myself into taking more actions that I usually wouldn't do. So this is kind of a write-off because I usually wouldn't do this. This position will be fine, I think, because even if we approach 410, 415, I have a crazy good hedge here that's gonna like explode in value. It's gonna be in the hundreds if we get up that high. Honestly, I'm gonna feel relatively rich if we do that. It's not like a theta strat because this one is, but this one definitely isn't theta. This one is negative 40 theta. It's bringing my number down, but it's still at 1,000. My theta is off the charts high. So yeah, Google 70 put is up. Where's my Google call? Google call is down. That sucks. Gold is doing better. Caterpillar, unfortunately, is close to my strike price. But I see the beauty of a ratio spread means that even though it's at 250, which is the strike price, I have such a profitable range. I think my my break even is like at 265, meaning that it's going to be hard for me to lose on these ratio spreads overall. They're very, very defensive. Means that you need like a really sustained heavy rally against your position to lose. Silver gates have stabilized. So yeah, there's this strategy that I'm considering. There's this other strategy that I'm considering. But now that I do have this upside, I might not open it. So I was looking at this strategy. I'm like, okay, let's open up SPX. I was looking at maybe going like several months out. Okay. Opening a put spread, in the money put spread. Okay, let's say we go 44 and 43. So that's $100 put spread. Okay, it costs $74, which is expected because it's deep in the money. So a good thing about this position, I was like studying this over the weekend. I'm like, this could be a new type of position that I try. Good thing about this position is that it's positive theta. So you earn theta because it's deep in the money, even though it's a long put spread, it's positive theta. And the only way it's going to go negative theta is once you breach these. Then it goes negative theta because then you have no intrinsic value left. But my idea was I buy this Then if we rally to 1300 to 4300 and shit, right? Everyone's going to be squeezed out. Everyone's going to be depressed. Be like, "What the fuck is going on? Why is it rallying so much? The market is supposed to be bearish." And then what I can do is if we rally all the way, it's going to be like an elastic band waiting to go back down on some news. Then I can close the short put and keep the long put, right? But then it's risky. So if we keep rallying, that's an extra here. It would be an extra like 20,000 by the time we reach here. Let me look at the numbers. It's going to be an extra like 16,000 by the time we reach here. So then if it keeps rallying, I'm going to lose everything. But then if we go back like a coiled spring and go back to like 4,000 all of a sudden on some bad news, then this one will print and this one would already be closed, right? So the odds are low that we rally this high, but I could close it even if we rally here, right? And then by the time we're here, my NQ is also making a killing, right? So it's an option. But I'm wary about opening any kind of put spread with my SPX delta being -9. Dollars coming up, that's good. Oil output stable. How's oil doing? Oil, $75. I'm too scared to take on any kind of commodities. But let me look at the IVR on different things here. Current usage, current stocks. Okay, Silvergate is still high. At least it's not at 100. That's my copium. Amazon 77. Snapchat's high. Can't do much with this because I don't want to open any positions until I start closing some. So it's probably going to be waiting game for me now. Maybe some tiny ones. Riot. 15% on Riot. Crazy good for Riot. Descending. Ascending or ascending? I get confused. Okay. HKD. I could have shorted this. I was going to. It looks like it's getting sold off now. Actually, no, I don't think IBKR is going to let me. Lulu's down. That's good for me. I had a Lulu short. I was going to actually double down on the Lulu short. Short call ratio spread. Biogen. It has earnings. Okay, February 2nd. Wonder what's going on with Biogen. I should maybe just close it. I don't know why I'm holding 25 shares of a nearly $300 stock. So annoying that I bought that. CS? Credit Suisse? Really? Credit Suisse, 337. Let's go descending. BBBY is the craziest here. Riot, Marathon, all these shitcoins are actually the best gainers, which is indicative of a NASDAQ rally. Snowflake is up. Shorts are getting squeezed here. Tesla shorts. These are like heavily shorted stocks, all of these. Look, they have high fee rates. The top 5 are the top 5, some of the top 5 most shorted stocks. Lucid, Ether has a high fee rate. This is Canadian. Can't believe a lot of people are shorting Ether. This is a pretty much, looks like a short squeeze rally, but the things that I want to rally are not, like BIIB and SI, which is a shame. Everything else is rallying. I guess I know how to pick them. SI's back up to 12. That's good. Dollar's down. Dollar, it's such a shame. That's $500 that I could have had. But dollars are dollars. Doesn't matter. Canadian or US, any of them. But yeah, let's go back. I want to look at my NQ. SPX looking good. For the bulls, NQ looking good for the bulls. Wonder if I should just take the profit here. No. My deltas are so negative that I need this upside. Pretty good gains though for one day. Nearly 100% gains. But the rest of them are looking bad. This one is going to be good long term. This one taking up a lot of buying power. But I have faith that we sell off before February and this one prints. Energy storage. I'm going to pull up a lot of Twitch streamers played. Oh, Counter-Strike when it was. Oh, you mean Credit Suisse? I thought I'm so confused. When it was volatile last year, I never played Credit Suisse. No, I was gonna sell short puts, but I didn't. But maybe Credit Suisse is better to play just, buying and shorting. I'm just scared of like contagion because they have a lot of shitty debt. And banks are volatile, as you can see with Silvergate, especially banks that are shady. They're some of the most volatile asset classes. People learned that in 2008, right? Don't mess with shitty banks because they don't all get bailed out, right? Okay, that's done. I want to open up also Tasty Live, although now it's Jenny, Liz and Jenny. Not my favorite. I mean, they're really smart. They're like amazing traders. But their trading style is not my style. I think they have small accounts, relatively speaking. Same with like Mikey Butler and stuff. They play with small accounts, which brings about different strategies. Dollar is going down. Silvergate's looking good. Actually, I don't care about the dollar. As long as these go up, this goes up. Don't care too much about the dollar. And these, I need these to go down. Can't believe I got myself stuck in this SI nightmare. Well, not quite nightmare yet, but it's a bit of a drawdown. And BIIB drawdown. Credit Suisse was a very big controversy. Yeah, same with Deutsche Bank, right? I never played any of those. I kept an eye on them, relatively speaking. I kind of kept tabs on where they were in terms of bankruptcy. But I haven't done any deep dive into their financials. The thing with these kinds of banks is a lot of their risky types of assets, a lot of the risk sometimes is off the books, like they don't put it in their balance sheet, in their filings, and that's what happens in 2008. Like a lot of these like high risk plays, they weren't on the books. Otherwise, people would have seen them. They were like off the books, and then it was like a domino effect. Once one went down, and the others went down too. SI's pumping. That's good. If SI pumps to 13, I may add an extra 50 shares short, or open up that put debit spread and then try to play with that before earnings. So yeah. So what do we have? Too early to buy tech? What's CNBC saying? Let me know if volumes are like way off and stuff. I can always adjust them. I'm not listening to my stream. Seems quiet, but whatever. I know why. Yeah, that's better. Okay. So US dollar is going up. SI wants to pump. That's really good for me. I'm gonna hit positive for the day. Is that even possible anymore? I went from having an amazing first 2 days to never even seeing green again.
that's certainly the tone that, for example, Nadella touted a couple of weeks ago or last week, just looking for a period of normalization that in his
403.
view
Nice.
should last a
I'm
couple of
making some
years.
progress
Are you
here.
looking at that kind of
Better than
timeline
losing.
to where
If no matter what you're
valuations in
doing,
tech
you're losing and losing
are
and
in a
losing
period
and
where they
losing
begin to look
and
attractive
nothing
again?
seems to work, you gotta reset.
I
Honestly,
mean,
I
I
would
think it's hard to
close
say, you
all
know,
of my
how
losing
long
positions and
this
reset
is going to be
if I can't make it
sustainable.
work. I've done that a
I
few
think
times.
we still have
Gonna
some wood
BRB.
to chop in terms of getting back to, say, some sort of reacceleration in earnings growth. And then when we combine that with, you know, valuations are still somewhat lofty. Now, they've improved quite a bit, so that's the good news. But they still do look a little bit expensive relative to other segments of the market. And then I think the last thing here is that some of the work that we've done shows that when inflation is higher than 3%, and we know inflation is coming down, but it still is higher than 3%, value stocks tend to outperform. So there's a range of factors that we'll be looking at to gauge the outlook. But as we sit here right now, still think it's premature to get back into growth and tech companies.
Yeah, I'm looking at a note from mid-December, but it's your 6-month view, and most preferred staples, energy, healthcare, but infotech doesn't even make neutral, right? It's one of your least preferred.
Yeah. Yeah, I mean, look, you know, we've seen, you know, some slowdown in cloud. You know, we know that these companies were big beneficiaries during the rush to digitization. I think there's some digestion now that has to go on there. We've already seen some slowdown in cloud. We think there's probably more to go. You know, some in the smartphone market. I mean, just a huge pull forward of demand in 20 and 21, and I think that's going to be challenging going forward. So, just I would say the best way to phrase that, Carl, is just we still probably have some digestion phase ahead of us, and valuations they've improved, but we don't think they're at compelling levels at this point.
Right. It does sound like within tech there may be some silver linings
All right,
that you see.
I have a tweet here from Nick Timiraos. They call him Nicky Leaks. He says, let's see what he says. The New York Fed's survey of inflation expectations shows 1 year ahead inflation expectations continue to decline in December, falling 0.2 percentage points to 5.0, its lowest reading since July 2021. 3 year ahead inflation expectations were unchanged at 3%. So I think this is still bearish because the Fed wants 2%. And if we have inflation at 3% for 3 years, that means higher for longer, right? It means higher rates for longer, which means destruction for high growth companies. There's going to be more of a discounted rate for stocks because they have to discount future cash flow because of higher inflation and such and interest rates. So I think it all hinges on interest and inflation. And I think tomorrow we have Fed. Let me see.
In a market where there still are some, you know, pretty material downside risks if we do enter a hard landing.
Yeah, it's going to be
So tomorrow at 6 we have Fed Chair Powell's speech. So Jerome Powell is going to talk tomorrow. That might move the markets. But I find the market just nitpicks what they want to hear sometimes. And yeah, I was reading about that yesterday. It was crazy. Brazilians, eh? They're doing their own January 6th moment. But let me lower this one. But yeah, the Brazilians were going nuts. And then I saw EWZ. EWZ sold off in the morning. And then at 1 a.m. And then it was bid up afterwards. PBR. What was PBR doing? PBR's down a bit. Mostly unchanged. BBBY. Can't believe it didn't let me short this. Nah, whatever. It's not worth it. I'm not gonna hold that overnight. Considering the fee to short that, let me look at the fee to short that. 31%. EMC has a 92% fee to short it. Holy shit. You can almost go long and then try to earn income on that fee. That is nuts. I guess that's the advantage of covered calls on like something like AMC, is that you earn on that. I really don't understand DRS, because that's a very good interest you can be making if you don't DRS. Plus, if you DRS, you can't really sell covered calls, right? Either. So it's kind of strange. They're shooting themselves in the foot, the DRS crew. Although GME's been relatively stable, so maybe DRS works. Let me take a look at my Lulu position. Lulu looking good. It was almost a loser on Friday, and now it's down to like almost zero. What I can do almost is I can take off this short call and then keep the long call, because it's only like a few cents, right? And then if we get like a crazy rally in Lulu, this one is gonna pop because of gamma. But I doubt that's happening, that crazy rally. I can just keep it because it's a ratio spread and I still have a max profit range. So pretty decent max profit range. So even if we rally, it could be to my benefit. Baba is positive 18 cents. That might be enough to like take the profits. But the thing is that I'm now at positive delta here. So if Baba keeps pumping, I'm gonna make money on this. And it's now negative theta though. So that's where it balances. You know, you gain positive delta, whereas it should be negative because it's a short call. But as soon as you gain positive delta, your theta goes negative too. So it's a trade-off. That's why it's gonna be hard for me to keep any of these ratios to max profit. This one I'm pretty close, because you end up getting negative theta and you're like, damn, maybe I should close it. I don't want too much negative theta. Although that's less than $1 in negative theta, so that's okay. Yeah. Let's take a look here. Netflix is pumping. This one might actually be good for me because I do have a chance of making max profit here. If I pin 360, that's a decently sized, that's $1,000 max profit. But I do have another short call at 400. I haven't day traded Netflix so far this week. I think I'm gonna keep it that way. Just stick to options. That's what I do best. This one is still looking good. And out of my losers, these are all small ones. They don't matter. These ones don't matter really. Wow, I can't believe CarMax and Nike are killing it. Nike went up so high. I might do a call ratio spread on CarMax. This one went really high on like mediocre earnings. This one is fine. This will be a strategic play. Aggressive put ratio spread on the index, which I can't believe the delta is positive though. This should be negative delta, but it has a lot of theta and still 39 days. This one should be a pretty good winner after a couple of weeks. The biggest risk to this is buying power requirements, because if we have like a sharp sell-off, like extremely sharp, like if we lose 15% in a day, this one probably will be a loser. But as long as we don't, the odds are this one will be a winner. I guess we'll see over time. This iron condor isn't working out anymore, and I only have 11 days. So that's a shame. Let's see if there's anything I can do to this, like take off a leg that's really cheap. This is a short put. I can always take off the short put and then hope for a sell-off. I did that during the jobs number day, I think, and it didn't work out. I did that on Friday with a smaller one. See, if I do this, I create myself a risk of another $250 loss, right? Because this will be remaining. They balance each other out. Yeah, wouldn't touch the long side. QQQ, this one is looking pretty bad because of the rally. But the thing is, if the rally continues, then my NQ is going to print like crazy. SPX bear put is a loser. But I have 39 days, and I also have this counteracting that pretty nicely. I feel like I have too much of a negative delta. Yeah. My position feels weak. Definitely not as good as it was like last Wednesday when I was up to my max. It looks more sketchy, my position. Let me look at this.
What that change looks like.
Crazy.
I do think, John, and you and Deirdre and I have been talking a lot about this. A lot of the regulation actually ends up coming out of Europe, and this idea that there's European regulation to hold these platforms accountable for the content on their platform. And I think that, yes, Twitter is private, but that doesn't mean that it's going to skate in terms of not being responsible or not taking appropriate action. And so that's why I think it's going to be so interesting to see what kind of scrutiny or spotlight now comes on Elon Musk if he was, say, irresponsible in firing the teams that pull off inappropriate content or violent content.
Yeah, and perhaps raises questions over what kind of regulations priced into those public companies, too, something we ask often. Julia, thanks very much. Let's get a CNBC News update. Bertha Coombs has that for us. Good morning, Bertha.
Hey, good morning, Deirdre. Here's what's happening at this hour. A Georgia grand jury has finished its probe of the 2020 election. They were looking into whether former President Trump and his allies committed any crimes while trying to overturn his election loss. The grand jury's final report now goes to prosecutors who will decide whether to bring charges. Former McDonald's CEO Steve Easterbrook has agreed to pay $400,000 to settle SEC charges that he misrepresented the reasons for his firing 3 years ago. Easterbrook has also agreed to a 5-year ban from serving as an officer or director of a company reporting to the SEC. Traffic back to normal in the Suez Canal. A ship carrying grain from Ukraine ran aground this morning. Tugboats were quickly able to tow it out of the shipping lanes. And Avatar, The Way of Water, brought in more than $500 million over the weekend. Big haul at the box office brings the movie's...
Wow, I can't believe that AMC's only up 2% on the Avatar news. That's usually when AMC pumps, when there is a good showing. Honestly, I don't think AMC can go bankrupt because people still need to watch movies, right? Sure, I mean, other companies can fill its shoes, but why put to waste all the assets? You know what I mean? All the buildings, all the cinemas. I think they would be ripe for a buyout if it goes too low. But then another company will be buying out its debt. But then there's a lot of goodwill, and there's a lot of physical assets and a lot of brand name recognition. There's a big ape army behind it and whatnot. So even though a takeover would include buying the debt, I don't think AMC is dying. It's not like BBBY. The world does not need BBBY. We have Amazon.com, right? Amazon's in every country. And we have here in Canada, we have Canadian Tire, we have Home Depot, we have Rona's, we have HomeSense. BBBY can disappear and nobody would bat an eye. But AMC disappearing would kind of change a little bit of the world, at least North America, where they are. I don't know. It could still go bankrupt, of course. I haven't done any research on their books and their balance sheets and whatnot. Part of me doesn't want this to go down because I want to profit off the NQ call. On the other hand, part of me really wants it to go down because my SPX delta, the US dollar, will shoot up too. I think ideally for me is we spend the next week pumping up the NQ. If we spend the next week pumping up the NQ to over like 12,500, I take my profits and then we sell off, right? That would be ideal. But things usually don't work out that way. I would lose on my Iron Condor, but that has a max loss of a couple of hundred. Everything else is in February, so we would have time to go back to the 3,900 range. Should have started the year with a bullish kind of stance. The only reason I started with like a bear stance is because the momentum, the trend was to the downside. And also last year we had a huge reversal during FOMC. I like looking at the hourly chart. It looks pretty bullish. Let me look at 15 minutes. Yeah, a little bit of volume going down, exhaustion here. But that's the MNQ, right? It doesn't say much. It's probably correlated, so it's fine. US dollar, Silvergate. I think Silvergate will stabilize. I'm surprised the premium's not coming down considering how it's stabilized. I think if it stays here after like 2 days, this will drop back to like 30, 25. And where's the other one? Yeah, this one too will go down. Yeah, I woke up at 1 in the morning to look at stocks. Look at BIIB, look at other stocks, and then I had a hard time going back to sleep. And then I eventually fell asleep, but then for some reason, my alarm didn't go off. So yeah, not opening positions till I can resolve some of these losers, because I'm okay with opening more and more positions if I have a lot of winners and I can control my my losses and keep a high P&L. But once my P&L gets to me and we have a drawdown and I have potential losers that could compound into huge losers, then I prefer usually waiting, especially with a low buying power. That's really low. But I do have some gamma risk, some margin call risk if BIDO sells off. That's 250 plus 300, 8. So that's $500 USD. And I feel like with the drawdown I got, I need to keep this. It's only like 11 days for $500. $60 of Theta. Calculation looks pretty good. This one gives me $280 of Theta. That's nuts. But the problem is, because there's earnings, it's not going to be linear, right? It's not going to go actually down by $200 a day. It might go down by 0 for a few days. This one, 200, 197. This one's more likely to go down because it's a bigger number. This one's a smaller number. It has more margin to go down. Vega's negative 300. Theta, delta. I never have such a negative delta, and part of it is because of the US dollar. What I want the US dollar to go up on its own, and that happens sometimes. Like this will only go down by like 60, but the US dollar will go up by a full fucking cent. Sometimes that happens, and that's what I need so that I can close this, take some profit. Actually, you know what I really need with the US dollar? I need it to rally back up, like really high. It's going to be good profits. There is a chance actually that the US dollar goes back up to new highs. I think you need a catalyst for that. to go back up to like, I can't believe we hit 140 in October. I was getting squeezed out. I was short here. But we need a catalyst for that to happen, and the catalyst will probably be like recession. People buying up the bonds, like a safe asset for a recession, and then US dollar is gonna go up. I want to look at a DXY chart, a long-term DXY chart, to see what happened in 2008. I have a TradingView account now. I like TradingView. Let's go and do products, charts, do DXY. Okay, let's go and do all. So 2008, yeah, there we go. 2008, DXY got a nice pump. And I think we can add TLT here, and you'll see the same in TLT. Yeah. So yeah, 2008, we got a huge bounce in TLT. I remember seeing a chart of that. And at the same time that happened, we had the DXY pump also. I don't know what's going on. I have to learn how to use this charting. Yeah, but you can see they all go up here at 2008 level. Same thing in COVID. So they all went up. Yo, TLT went crazy during COVID. Holy shit. And yeah, I think this was another crash, stock market crash. And then yeah, 2001 bubble crash. So the likelihood of a crash is not zero. So keeping USD for that is probably better than Canadian dollar, because the USD is like a safe haven, right? Safe haven has asset. And if we have a global stock market crash, a lot of people around the world are going to be less confident in their own currency, and they're going to bid up the USD. So, but I think the interest rate on the Canadian dollar is higher. I'll have to check. But you know what? With USD, now I can buy treasury bills too. So treasury bills are going to pay me more than what they do with the money market fund. So yeah, interest for the first week, $200. It's kind of what I expected, because I expect around 1,000 a month. So it's in line with my expectations. I'm getting negative USD interest because I'm short RSX. But I was listening to Tom Sosmouth. He was talking about the RSX. He was saying that they're going to split it up and sell the assets. And he's like, it's going to be worth like nothing. And that's good for me because I'm short 400 shares of RSX. So I'll be able to close it for nothing.
After the break,
For pennies.
2022 was historically bad. It was brutal for the IPO market. The Renaissance IPO ETF down 50% in the past 12 months. But 2023, could it open up the floodgates again with a number of multi-billion-dollar companies waiting in the wings? We'll take a look at who might be next to go public. Don't go away.
Base metals jump as low stocks compound China reopening optimism.
Surrounded by craftsmen who are making them.
SI's pumping, that's good for me. But it's funny because the premium doesn't really go down. Okay. So we have a lot of analyst changes. Let's take a look. So Coinbase, hold. First Solar, negative hold. Lulu, outperform. So somebody gave it a good rating. SI, wow, SI got some good ones. So actually no, underperform is usually bad. So SI got 2 bad ones. But the thing is, I don't think IBKR is up to date. I think this comes late to me. I need to have a way to get them ASAP, right? So analyst ratings for the stocks that I hold. I might try to find a way to do that so that I can get kind of a instant notification of an analyst change. If anybody knows a way, there we go. That's good. I got a little boost. I'm really scraping the bottom of the barrel. I'm happy about $100. Progress is progress. There we go. Oh, this is selling off though. US dollars going up. US dollars going up is good for me. I got a nice 50k position. Every cent that it goes up, that's $500. So I'll take it. If it does it, if it pumps like crazy, I'll take it. Let's look at if there's any. The T-bill auctions and European close too. So those happen at the same time. So those were higher, right? That means people are bidding up the bonds, the treasury bills, I think. That's a lot. Let's look at the Fed funds. These are down actually by more now. That's bullish. These are still up. I was thinking about opening up a short on the Fed funds because now these are at 4%. The thing is that the market is pricing in a rate cut, and I think that what's happening is we're not getting a rate cut. I don't think we're getting a rate cut by, although that's 2024, so yeah, that's next year, so that makes sense. I'm going way far out. So this is 4.5 by December 2023. If these go at an extreme, like a real extreme, I may consider doing a bit of research. See, look at that. That looks almost like an extreme. And then opening up a short position on it. Like maybe if we reach, let's see. Oh, wow. It was at 97. That's when we were super bullish, weren't we? And then we started selling off here. So if we reach this area again, we probably won't, because inflation story has changed a lot since September. I think we had a really bad print somewhere around here. And the inflation story changed a lot. So we probably won't go back here unless it's inflation's over and interest rates are going down. However, this is pricing in a 4.5% Fed funds rate by December 2023, right? So let me look at consensus. December 2023. Around 5%. So the terminal rate will be around 5%. Okay, so current Fed funds rate is at 4.33. So 4.33. There we go. That looks like 4.33, right? Yeah. 4.33. Okay, so that's the current Fed's fund rate. They're gonna add another 25 cents, right? $4.10. So the bet will be that they will not lower rates this year. And if you short this contract here and you're correct that they will not lower rates this year, then eventually the price will go back down to price in whatever rate it's going to end up at, right? And nominally, there is so much monetary value to this moving. Like, this move would be nuts when it comes to the size of this. These are like 400,000, I think, Canadian or something. So a 1% move is 6,000, right? 1.8%, 2% almost, right? So that's a lot. It's not that much though, but it's a lot. It wouldn't be worth as a long-term, maybe it would. I don't know. Something to consider. I don't know how much buying power it uses either, so there's that. How are the sectors doing? We have technology up the most. Discretionary up quite a bit. Is that why Tesla's up? Tesla's up 7%. Wow. How's my call ratio spreads on Tesla? Maybe I can open another one. This put ratio spread for February is doing so good. It's worth basically 0 now. I can close it. It still gives me 11 theta though. That means it's gonna flip the other direction eventually. Queen is pretty much 4 cents. I feel like I can close this. Why am I so reluctant to close these? I made the same mistake with the Silvergate, right? Queen is less risky than Silvergate. I was reading something about Queen and the amount of cash and the amount they're earning on interest is crazy. Whereas like there is a floor to how much they can lose because of how much cash they have. So like taking on a large Coinbase bet after the next sell-off is definitely an option. Like if we look like far out and like a $15 put, $12.50 put, I can technically sell 100 of these for $2,300, but I wouldn't want to go that far out. I would want to sell off first and then sell it like 46 days out. Right? Maybe I take the profit and I roll it into February 24th. Right? Maybe. I'll hold off on that just because my buying power is shot right now. I'm gonna refrain on opening a position for now, or rolling or anything. Yeah, I think it's good. I think my P&L is gonna improve drastically within the next few days. My net val, probably within a week, I'll be back up to like 406. Hopefully that works out. I almost feel like I should take the gain here, but then my SPX delta will be worse. Maybe close this to close that. No. Bullish on the dollar. SI keeps going up, but this doesn't. Like if we get a huge pump on the NQ, there's going to be so much convexity in the demand for these call options that the value is going to pop into the hundreds. And then that's going to be a huge gain. Several thousand easily, if that happens. And the odds of it happening between now and February is not 0. It's definitely there. If you look at the hourly chart, you can see that it pumps. When it wants to pump, it pumps, right? If you look at the daily chart, you can see, wow, this is a good pump, eh? But this shouldn't be 1 day. This should be 2 days. Or maybe not. No, this should be 2 days because this started on Friday. We didn't go up like by 380. Did we? No. We started the day at 11:1, right? 11:1, yeah. We didn't start the day at 10:9. Unless I'm mistaken. Okay, let me look at some of these stocks. I haven't looked at them. Wow. Oh, that's a weekly chart. It scared me. Like, damn, what's going on with Tessie? Did you option trade right away or did you go buying, shorting, normal share? At least on this account. I went straight to options trading on this account, Sir Wizzle. because I've never had success day trading. Never, ever, ever. I never tried it for a long time. Like I didn't like, bootstrap and, go and study every single strategy and technique and indicators because I didn't find it worth it. I realized early on, like this was like I'm talking about like 8 years ago. It's like when I started my career in my field and I'm like, okay, I'm making some income, let me open a brokerage account. And then instead of like investing in solid companies like Apple and Nvidia, which I knew in those days were good companies because I used to like play video games and I used to have a MacBook and whatnot. But instead of doing that, I'm like, yeah, well, let me day trade. I'm gonna make money day trading, and then I got like destroyed, hardcore, like destroyed by every single thing I tried. Like the market outsmarted me. I'm like, okay, this is not worth it. Let me just stop doing this and just do other stuff with my time and money. And then, like 5 years after that, I opened a brokerage and I tried doing short options. I didn't stick to it because I was opening a business back then. So then after I sold the business, I'm like, let me try that for real now, see what happens. And I think it's worth it, but it definitely, there's an opportunity cost, right? Like right now, I could be at a company making 100K with no risk. It's just my time and effort, and with like career development opportunities. You know what I mean? There's so much that you can do rather than sit in front of a computer and look at charts. So there is an opportunity cost. But then again, there's also like an opportunity gain of doing this because by doing this, I'm learning about markets, I'm learning about finance, I'm learning about companies and whatnot. So it depends how you're doing it, right? If all you're doing is like, looking at price action and indicators and nothing else, and you're not learning about like markets and finance, and let's say you're just an AMC ape and all you do every day is look at the AMC chart and you look at the DD you've read 1,000 times and you're like, I'm convinced we're gonna MOAS, and that's all you think about, then there's a huge opportunity cost. You're like killing your brain in a way, and future opportunities because of that. But then again, there's like the lifestyle advantage too, where I can technically wake up whenever I want. Like the thing with this kind of options trading is I don't need to be at the desk constantly. I can go for a jog, I can go to the gym, and but I would rather, especially if positions are looking a little bit heated, I would rather be at the desk just to pay attention. If something sells up sharply, what is this music? I'll be able to react faster than someone who's at the gym or someone who's at work. So yeah, let's take a look here. Tesla NQ's going down. One sec. Okay, it's almost 9 o'clock. I have to take a snapshot at 9. Gotta start working on my Excel sheet so that I can track. End of day, I want to have the Excel sheet set up so that end of day I can look at all of these Greeks in better detail and sort them and make charts and look at their changes through time. It's going to give me better grasp and understanding of what's going on so that the next day I can take action. I could be like, yeah, let's close this, let's open that. I think I benefit a lot from sell-offs because of some of these ratio spreads that What is XOP doing? Did I ever sell XOP puts? I don't think so. But XOP bounced, so don't think it's a good time to sell the puts now on XOP. But there is the whole China reopening story, right? So maybe it's good to take a bullish bet on commodities and open up some ratio spreads on commodities. I hate when my chart looks like this. So it might be an option. Although we were a few days ago down to 125, right? So, but the China story kind of appeared around here, right? And then we started to go up. So yeah, maybe. Should make myself some tea or something. See if there's anything, any good discussions on Twitter. I like to listen to some of these discussions. Sometimes when they're good. I was listening to people discuss MMTLP or something, metamaterials. What a clusterfuck of a story. I had a hard time understanding how they can resolve it or whatever was going on. It was so weird. Yeah, nothing good. They apparently they halted it and they haven't opened it in weeks. And they halted it, people say, because the price was going to skyrocket, I think because of a merger or something. And there was more shorts than they had shares or something. Some kind of MOA story. And then they halted it. Is this it? Metamaterials. Provided on an indicative and informed basis only is accurate. You see, this is crazy. I've never seen this. And it's halted. No data type. Crazy. I can't even pull up a chart. Sounds like crime. That's what they would say. Crimes are being happening. Let me pull up here. Let's go here. It doesn't even show up on TradingView. Meta materials. There we go. MMAT. Oh, that's what it is. Okay. MMAT is trading? So what's MMTLP? I don't even understand. I was trying to understand based on their discussion. So it is trading. But I had no idea. They weren't explaining it for someone new. They were like deep into some weird discussion about short sellers. So I'm like, yeah, this doesn't concern me. I wish somebody would give like an overall overview of the whole story. Probably have to read some articles. So it looks like we have kind of a bull flag, right? It's gonna either go up with a lot of momentum or maybe sell off. I don't see it selling off. I feel like I shouldn't have been bearish, but it's fine. It's gonna work out. I have a full 1, 2, 3 and a quarter weeks to make my money for the month. So I'm not gonna panic here. We're good, we're good. Interesting option trading strategies seem more laid back compared to day trading. I know it is. Honestly, every time I have day trades on, I can't even just think about the market. My mind is all about that trade. I'm like, I need it to move one way. You just stare at a screen, stare at a chart. Whereas when you're doing these option strategies, you think about the broader market. You're like, where is the market going? Where is it going to be in 3 weeks? And how can I make money off of my assumption? Like, I make the assumption that the market's not going to surpass this amount in 3 weeks or 5 weeks, 45 days. And then I trade based around that assumption. And I set it up so that even if my assumption is wrong, my losses are something that I can control and limit so that I don't suffer huge drawdowns because of a wrong directional assumption, right? And when you're trading this kind of strategy, you can just make money off of volatility expanding and contracting, right? Like today, volatility actually, the broader volatility index actually expanded, even though we have a green day. Yo, Louis, how you doing? Tomorrow we're gonna have Fed Powell speak, and I think that's gonna be a trigger for either upside or downside. And part of me hopes. So what I want. So we have tomorrow we have the Fed, and Thursday we have CPI. So I want the Fed to sound somewhat dovish to make the markets rally like crazy. He doesn't even need to sound dovish. I want him to sound hawkish, but I want the markets to interpret what he says as being dovish. And I want markets to go hog wild, like 10-20% gains, whatever. I'll take it. I'll take my profits off the NQ and then hold everything else. And then on Thursday, for CPI to come up like super hot and then to go back down. That's ideal. But odds are things don't happen that way, of course. But that's my ideal. How am I doing? I'm doing pretty good, man. How about you? Good trading day. I'd be happier if this was a little bit higher. But overall, I can't complain. It's a relatively small drawdown. Silvergate could be a pain in the ass. But it's going down. Like this was at 45. Like if we look at the implied volatility, it's still at the highs. So hopefully this goes down. You're doing good too. Nice. I had a nice weekend, chill day. Markets are chill. I'm tilted a little bit too bearish. But it's weird because I feel like I'm tilted bullish just because of this NQ naked call. Oh, you know what I can do now? I just realized I can turn this naked call into a call debit spread by selling another one further out, and then implement the strategy where if it runs like really high, then I take the profit on the long leg and then keep the short leg. You know what I mean? But maybe I'll do that. Okay, if NQ reaches, let's say 11.5, 11.6, I'll open a short leg, maybe $2,000 out or so, or $1,000 out, and then see about pulling off that strap. It's gonna kind of lock in the gain that I have, because if we sell off, then I profit from the short leg. But it creates more risk in case I take this off and keep the short leg, because if we rally to 17,000, it's gonna rip my face off. So yeah, maybe Tesla day trade here. A Tesla short looks like it could work, and I haven't done one today yet. Let's try one. I haven't done a day trade yet today because I have so much going on. And I'm not paying attention to the dollar. Okay, it's back up to the 7, almost 8 handle. So dollar's looking better. A lot of negative news coming out of Tesla. BYD has a lot of inventory that is reserved, whereas Tesla doesn't. Tesla has a lot of stock, right? So a lot of people think that Tesla is going to go back down to a normal evaluation of like instead of 25x, like 10x or 8x. Oops, hold on. Let me listen to this. See what they're saying.
Yeah, I'd love to see Weiss remotely positive. That's a great Monday for me. So what I will say about just the data and what everyone's already said. I mean, ISM prices paid coming in lower. We already talked about the inflationary numbers. We have CPI coming, on Thursday, probably a 6.5% read. Wage inflation decelerating slightly. And also, if I'm talking about earnings have been revised down 4%. That's the first revision downward since, the third quarter of 2020. So expectations have been lowered. They likely need to go lower. But these are some catalysts that could be, positive for stocks in the near term, which I think, yes, I think we can see a scenario where stocks could move here in the first quarter and into the second quarter. And my concern always is when everyone's on one side of the boat, it's a good time to potentially be contrarian. So that's really what our focus is going forward, looking at the economic data as we continue to do so and look at other areas of the markets that have been beaten up.
Okay. I mean, obviously, we're not naive. I mean, much of it depends on what happens with the Fed, what happens with CPI this week, and then ultimately what they decide to do as a result of that, at least in part of that. Let's bring in our senior economics reporter, Steve Leisman. He's joined the desk here. I find it interesting the sort of title of your report today, if you want to call it that, is the tone-deaf Fed, in part because there is a question as to whether the allegedly data-dependent Fed is really data-dependent at all, or if they've already made up their mind and set their destination and come hell or high water, they're going there no matter what.
I think it's the latter, Scott. I think
Tesla's selling off a bit. I can take a bit of profit there. It's good.
In the minutes this week on last Wednesday, where they said no Fed official is forecasting a cut for 2023. I mean, that may be true, but how do they know that? How can they be so sure? Look at the SEP itself, the statement, the summary of economic projections.
You know what I don't like about these guys? They're all like super rich. They're all like on yachts and shit. They're all like friends with millionaires and billionaires and whatnot. And then they're here like giving shitty advice to people. But it's still interesting. Let's hear what he says.
In the rhetoric, I think they are in a forward guidance mode, a mode in which, Scott, they are going hell or high water to that 5% mark. They have a date with 5%.
Today, you only spend scaling out of your crypto trades you committed yesterday. Nothing is better than your long. Nice. Yeah, you were Solana, eh? Good job. My crypto accounts, I never trade. I just keep it in. Like, my crypto trades are these. Like this. This is my crypto trade. And even Silvergate. These are all my crypto trades.
Because it's
Right?
the best gauge, I think, you have of what they're going to do. Their word?
My crypto account is looking good. Let's see.
Rather than, what are you going to look at otherwise, Scott?
I have it on my phone. I have the app too on my computer, but I never open it. Every time I have the app open, I want to go margin trading. Yeah, looking good. I'm up like $1,000 in the past week.
And I think that's the issue right now, is that they're heading,
Good
it
gains.
seems to me, the same kind of sort of monolithic, everybody on one side of the boat idea that they decided it was transitory. I'm just surprised they, A, haven't softened their rhetoric given the data, and B, that there isn't a broad range of opinions, it appears, on the FOMC. You look at what the market did, Scott.
Some rich dude said, yes, retail, you have time to sell crypto. Your signal to buy. Nice, man. Good job. Gotta be careful, but that's a good call you had. You gotta be contrarian sometimes.
What happened with ISM, the market took that pretty hard in their sense
I
of
could have taken like a few bucks here, but I want more. I want like a whole 25 bucks. I wanted to come here.
in the middle, on the way down. What does that look like? Is that kind of an Everest kind of thing? I don't know what if you guys have done any climbing or anything.
It's like playing with fire. Yeah, it is.
Trending down 420 again.
But not as much at these lows. When you're buying at the highs, I realized this cycle that it's risky. But who knew the Fed was going to raise rates, right? Hindsight is 2020, right?
I mean, you say, I don't know why they haven't changed their language a bit, but in reality, we know. The reason they haven't done it is because if they know
Bump in,
at the
bump
moment they
in.
do, the very stock market and the market in general.
Oh, I didn't save my data. I need to set up some timers actually.
And they can't afford to have
I need a timer for waking up.
any more than perhaps they already have and are.
Let's see here. Export.
The impact would be.
January 7th, January 9th.
I do think, though, that the market is already doing what it's going to do, or has already loosened financial conditions in that regard. And if they want to do some damage, I guess, to the long end of the curve, they can
NQ,
sell bonds out that way.
MES, nearly 4,000.
For me, Scott, is that they do not appear to be incorporating the considerable risk of recession. And what is not talked about enough is the effect of balance sheet reduction. They're going to do $1 trillion this year. They did $400 billion last year. I had a
Positive Vega. Ah, that's why my Vega is low.
and I asked
I was like, why is my Vega only negative 300? It was like negative 600 or so last week. And then I noticed that this NQ position gives me 150 positive Vega. That's good. That basically counteracts a lot of these negative Vegas. So it makes me benefit from expansion and volatility to the upside, more so than downside. Downside volatility expansion would probably be bad for me because of all my short put ratio spreads.
They're doing. And if you take a look what their target is, it's 2.5. It's not 4. It's not 4.5. And isn't there concern after the disaster of being too easy for too long that we just firm out at 4.5%, and that's not going to be great for the economy on a long-term basis? So they're sticking to their guns. And the follow-up with that is, what's the chance of the Fed being so dug in at this point, in their view, that they reverse at the next meeting or even give daylight at next meeting without disastrous numbers for the economy?
Well, first of all, I don't agree with the idea of not listening to the Fed. I think that's a bit like saying it's really hard to see. Let's turn out the lights.
Well,
I don't really.
let me change that. Let me change that.
With that. But let me just tell you, Steve, I don't think what the disaster here is that their last time was that they missed the signals in the economy. They all agreed to one thing, which was that it was transitory, and they didn't have a debate about it. I think that they could be right, Scott, here, or Steve, that the inflation will end up being persistent, just not hearing the debate on the Fed, at least not in public, about what the outlook could potentially be.
Maybe you will start hearing that if some of the economic indicators get a little more squirrely than some have already gotten. I don't know. Thank you, Steve. That's Steve Leisman. I want to move on because I want to talk about tech. You mentioned high beta. As the Fed is deemed to get easier and rates come down, obviously, Joe, it's going to be more beneficial for tech, which is having a big day today. No big surprise at all. NASDAQ's up better than 2%.
Don't confuse it with fundamentals. It's positioning. That's all it is. This is not something that if you're sitting at home, you say to yourself, there's a paradigm shift where we're returning to the environment of 2020 or 2021, or even predating that easy monetary environment. Understand that rates are going to remain uncomfortably high for an extended period of time. Steve just told you, I fully agree, the balance sheet tightening is going to matter. What this is about is that there has been an underweight positioning towards a lot of...
If only they were saying stuff like this last year. Last year they were all bullish, and so many people lost money listening to them. So you never day trade, you only do long-term investment. That's the best way, Louis. I think honestly, if more people did that, more people would participate in the market. Because a lot of people who day trade just lose their money and then they quit, and then they don't participate in the market, and what happens is they don't partake in the growth of wealth that's associated with the stock market. I want to close this. I don't know why I shorted that. I can't catch a break with my day trades. My day trades never work out. I'm going to keep it for now. That's only $10. It could easily drop back down. But yeah, most day traders who fail, like who blew up an account, they don't return to the market for like years and years and years and years, right? You only invested so far, but came from crypto, tried to invest too. Big mistake. Oh yeah. Oh yeah, I guess bad timing, right? 1 year ago, I see. So then you started investing at relatively bad timing. When I came around to investing again, or doing this, it was September 2021, and I had a feeling that markets are not going to be nice to me. So, so instead of like just buying and holding, I wanted to play with options and volatility, and it's been good because I outperformed the S&P by like um, S&P was down what, like 20%. I was up 7%, even though I made some mistakes, some big mistakes. This year, my plan is to be up 20 plus percent, which is gonna be hard. Like 2% a month sounds easy, but it's extremely hard because the idea is you want to do it consistently, right? And having like a single 10% month isn't that hard, or 5% month. But if you want to do it consistently, month over month, that's when it gets hard. Okay, this is selling off, so that's good. Because you're new to invest, yeah. Especially if you're new to invest, you buy solid companies, learn how to read a balance sheet, learn how to read a cash flow statement, read other analysts, what they say about the balance sheets and whatnot, about their earnings reports, and buy the product, see how it is, and then hold on, I'm gonna be right back. I'm making some tea. All right, what did I miss? Did I miss anything? Looks like Tesla is range bound. NQ is pretty high. Has the market exhausted itself? This options pricing went down a bit. Maybe there's less demand for it now. Maybe everyone thinks the market is slowing down. But I think here we're getting either a big move up in the next few days or we retrace back down. And I'm positioned to benefit from both scenarios. So I will just hold. It looks like it, doesn't it, eh? Look, I think it's just exhaustion. I think what happens is you have a big run up and then you kind of exhaust yourself. You create, this is a bull flag because it is at the top of a big move up. So we have a bull flag everywhere. If you go 15-minute chart, everything's on a bull flag. But the bull flag can always go both ways. This one is uncorrelated because it had its own crazy black swan recently. But yeah, this bull flag can lead to both directions, up or down. But it's called a bull flag because it looks like it wants to go up, right? So maybe we get a big move up. Recently, you buy Airbnb, Alaska Airlines. Nice, Louis. Let me take a look at Airbnb. I haven't looked at it in a while. I considered opening a position on it because a lot of people are bullish and it's gone down a lot. I think you bought it at a good time. If I look at the daily, yeah, it was down to 84. I considered opening a position there. So if you opened it here, good job, man. Good timing. You picked a really good time for that. But here, I was considering opening a ratio spread for this, 45 days out. And like, I don't know. It would have been way better if I opened it last week. Like now I'm barely going to get a credit for it. 26 cents isn't much. But it's something. But I think I have enough downside. So I'm going to hold back. I'm going to BRB. I'm making myself a bagel too. And see if there's anything on. It doesn't look like it. Let's see what he says.
Well, the eco data is going to be significant. No surprise here. When you get the CPI numbers, anything can happen. But I think right now we are looking for this idea that we're approaching the end of the tightening cycle and that you are going to see, if there is any selling, it will abate by the second half of this year. And then you will have a more sustainable turnaround. I think that's what a lot of equity investors are really
Eating
waiting for.
poke bowls? Nice. Sounds good.
Stock by stock basis. So for example, I think a really good kind of poster child of some of the issues to watch right now is Lululemon, for example, which is actually down quite a bit, despite the entire market being up, simply because they are dealing with margin pressures, and it's a hangover from 2022.
Which takes us back to the earnings and what happens this year with earnings, which we're not sure about. Thank you so much to Kriti Gupta. You can catch her again at 1 p.m. Eastern Time when she will be anchoring Bloomberg Markets. Coming up, we'll talk with the former U.S. Ambassador in Mexico, Tony Garza, about what can come out of the summit there as the leaders of
All right, I'm back. So one thing to consider is that if you're a long-term investor, you want to keep an eye on some of the macros, right? Because as the 10-year yield goes up, then tech stocks go down. That's the way it always is. If you open them up and you put them side by side, I'll show you on this screen here, they're correlated. And that has to do with projected cash flow. There's a discount rate on that when interest rates are high. And inflation also affects the value of money. So let's go 10-year yield. Okay. And then let's go hour. Or let's go daily. Okay, so this is the 10-year yield. Why is it a percentage? I swear, I gotta learn how to use this stupid trading view. And then here, let's add, hold on, this is not good. How come this shows 140, 105? 10-year yield. Okay, US 10-year, that's the one, damn it. It still shows at 100%. Something's wrong. Honestly, I'll have to look at this. The 10-year, yeah, so 3.5. I don't know. I don't know how to fix this. Ten-year micro treasury yield. So as the yield goes up, then 10-year futures, then tech stock go down, right? And the stock market in general goes down. So it's something to watch out for. Anyways, I'll figure out how to overlay that. I guess I can just do this. Do monthly. What do we get? I don't like the charts with IBKR. IBKR is good, but they don't have the best charts. See, I only get like 5 months, whatever. Yeah, never mind. So yeah, this is not selling off. Let's take a look at the NQ. NQ is 1 minute. Stabilizing here. This went back up a little bit, my naked call. So yeah, the reason that I don't invest to hold right now and I only do this type of options trading is because people are projecting the 10-year yield and all of these yields to go up because the Fed is going to raise rates, right? And the stock market's going to go down because of discounted cash flow. And then also, people are also predicting an earnings recession where companies make less and less money on their earnings report. So that's going to lead to another type of contraction in stock prices because of that. So then we might reach like SPX, we might reach like the 3600 level. I think the next big leg down is going to be the 33 to 3600 range, and we might be range bound around there, or maybe 32 to 3500, because we've been range bound ever since the first drop. We haven't gone above 4200 since then. Oh, I see. It's lunchtime for Wall Street. That makes sense. But I wonder how much they actually move the markets themselves. The people at Wall Street. I think everything's done like remotely on computers. Oh shit, looks like we're selling off here, eh? Crazy. Might be good for me. I may keep this Tesla short in case we sell off more. Or maybe we just cash it out. But it's nothing though. I want it to go lower. It would have been good to grab it here, like 10 bucks. Tesla's dumping. Tesla is actually dumping. 15-minute chart looks like it wants to fall off a cliff. But it's going to be similar to this 15-minute chart. So if this falls off a cliff, then this should fall off a cliff too. I don't know about SI. SI doesn't seem to be too correlated. The 15-minute chart doesn't show anything of the sort. Maybe a small. Stick this to the 1-minute chart and then see. This one I can close around here. Make 50 bucks on it. Maybe. If we hit there. Do I travel? No, not at the moment. I just started doing this full time, so I'm focusing on it hard. But once I feel more confident in my strategy and my gains are more long-term, like if I can long-term average out 20% a year, then I'm gonna start traveling all the time when I do this, and then try to look for other sources of income to supplement what I'm earning with the markets. Because I think it's always good to have more income so that you add more money into it. But the thing is, I'm also looking at getting a dog. And if I get a dog, I'm not going to be able to travel too much. So those are the main questions right now. I was considering actually just like buying a property in like a tropical third world country that has a devalued currency. So the property is going to be super cheap, like in the Philippines or something, and then just fly there 6 months a year when it's cold in Canada, because I'm in Canada, and then just have internet there, and I do my work from there, and then I never have to feel cold ever again. I could only dream. Maybe one day I'll do that. Hopefully the Canadian dollar goes up in value so that I can get a nicer property too. Or maybe like a South American country, because Thailand, is that a good idea? Yeah? Because I know a little bit of Spanish, just a little bit, un poquito. So I could get by. Thailand's a good option. I'd have to research where is the cheapest property. You're from LA? Nice, man. You're lucky. You don't get that cold. I'm in Vancouver. So, like, I'd have to research a country where the property's cheap, the taxes are cheap, it's not too far so I can get a cheap flight. And then just chill there. Like, go jogging, go biking all the time. Here, I love jogging and biking and rollerblading, but I can't do it when it's cold. I gotta wait till the summer. When it's cold, I just like walk around in my jacket, winter jacket. And right now it's raining. Nice. Here it rains all the time. Today's not though. Let's see here. LA's cool. I want to visit one day the west coast of the US. I haven't even crossed the border since I moved to Vancouver, to Seattle, or to what's it called, that area on the border. I haven't even crossed once, but I should check it out. Go to LA and San Diego, and maybe Nevada. A lot of digital nomads prefer Bali over Thailand. Oh yeah, you pay a price for it? Interesting. Maybe if I make it rich. Maybe what I should do is I should open another business like I did 5 years ago. And then what I was considering is, because I only do this like 7 to 1, 6:30 to 1. And then from 1 to 6 is like my leisure time. I take naps, I walk around, I go to the gym, I go shopping, I go make food. So I could always like run a business from 1 to 6 and then try to get clients, build up the business. And the thing is that as a business owner, I would selectively be busy. You know what I mean? I would be busy when I have clients. When I don't have clients, I can do whatever, especially at the beginning. But the issue is you're paying a lease unless you're buying the property. And if you're buying the property, then I'm not going to have money to do this because I'm going to have to put all my money in for a down payment. It's stress. But if I do that for another 2 years and sell the business, then I'll have enough cash to like just do that. Buy a property in Bali and do option trading and just be a nomad. Sounds like a good lifestyle. But I would need more capital than what I currently have. Unless I hit a lotto. Like if this gives me a nice 30K, this one, can you imagine we rally to 14,000? This is a lotto ticket, I swear. It's a $500 lotto ticket. If we rally to 14,000, that's 30K in profit. Of course, I would lose on some of these, but it would just be insane. That's why options trading is addictive, because most people, like 99% people who trade options, they look at this graph. They're like, yeah, baby, let me buy 10 of these and I'll make 400K. That's all people look at. But what people don't understand is the best option trades to me look shitty like this. You don't even know what it's doing. You're like, what the fuck is this? Why would I even want this? What's the value of having such an ugly looking position? But it's just that it ends up working out, right? It ends up, you have a higher probability of winning, and it's small victories over big wins because you have more of them. Whereas the big wins, you're gonna lose 20 before you get one big win. And then by the time you get it, you don't have any funds to multiply. You're broke. Took a few bucks here. Feels good after losing so much money day trading. How's BIIB? Honestly, I feel like closing this. It's such a shit trade that I did on Friday. It was a mistake opening this. I don't know why I did. I don't know anything about the study or the company. And I kept it even after a drawdown. Probably gonna close this. That is crazy. Shady company, eh? Shady company do shady things. It's only 25 shares. I can take another $10 loss on this and it would be it would hurt, but it wouldn't be the end of the world. It sucks because I didn't need this. I really didn't need this. And that's an extra $400 that comes out of my gains from the month because I just haphazardly decided to open this position. It's really bad. I mean, we're definitely not coming down here, right? That's not gonna happen. Wow, we reached all the way down to 268 today? That's crazy low. 25 shares of Biogen. It's not a lot, but it's a lot because it's a $275 stock. Tesla, let me go back to the US dollar. US dollar. Pretty low. I need it back up. I have a position on the US dollar and I'm down. Down on it. But US dollar is always good. Like if I decide to buy a house in Bali, they're gonna take US dollar. They're not gonna take Canadian dollars. So it's always good to have. But I hate that I don't have an even number. Somehow, someone sold me like a fraction of a dollar. And then I haven't been able to get rid of it ever since. Nobody wants to buy it off me. Look at my daily P&L, $20. It's so flat, all things considered. Super flat. I guess I'm a little bit too hedged. Looks like this went down in value. It went down by 3 more cents. So it looks like we're making progress on this front. These two are my biggest worries. Even though they're not, well, $3,000, $3,200, that's a lot. For 11 days, that is a lot. These are my biggest contributors to my theta stat. Combined, they're about half my theta stat. So usually you don't want that. You want your risk spread out. The higher your theta, the higher your risk. So if I have about half of my risk associated with one ticker, it's honestly, it's almost even objectively a bad strategy long term. But if you like on a short-term basis, occasionally do this on the right play, it could pay off. It's just that on the long term, things average out and you probably end up losing more than you make if you do this all the time. You want to spread your risk out so that it's across multiple, preferably uncorrelated assets. And like in my case, a lot of things are correlated, right? A lot of things are like tech, you know, this is tech, this is China, tech, 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 tech. The only reason that I'm not getting squeezed on these trades on either direction, it's because the ratio spreads, except for this one's a short strangle. This one I was doing better last week. Apple really went up, eh? Crazy. I might actually end up losing on this if we go too high. Yeah, it's because most of them are ratio spreads, some iron condors. So if I was doing like all short strangles, then I would want to have more uncorrelated positions, things like currencies and metals and like agriculture and stuff like that. US dollar is dumping, crazy. And the NQ is not even going up. SI is going up. I think as long as SI stays up for this week, I'll be happy with the week because everything else will balance itself. My theta is good no matter what if we're range bound and we don't hit any of my targets on either side. As long as this stays up, I'm technically collecting 1,000 a day in theta. This is what this means. This means I collect $1,000 a day in theta. And of course, this number goes down every day because you end up having less and less theta to collect. But the principle is there. You're making good cash every day. But it also means you carry risk, right? Minus 10 delta is a little bit aggressive. And if I didn't have this NQ as a hedge, I'd be worried for my upside risk. And this is why yesterday, when the futures opened, I bought this NQ call at 2,800, and now it's worth, no, I bought it at whatever this is worth. I think it was 700-800 or so. I forgot actually. But now it's worth $300 more, right? It's like went up by like 40% in price. As of now, you only superficial idea about options, trying to find some good learning resources along the way. Cool, man. No props, Sir Wizzle. I'm happy to explain. The thing is that I understand it, but I never like speak it out loud. And I find it helps your understanding. You start to feel like you understand it better when you explain it to people. And in real life, nobody wants to listen about options. People don't give a shit. But on the internet, you find some finance nerds who like it. Silvergate's going down. That's not good. And yeah. So theta represents how much money you make or you pay to hold it every day, right? Portfolio theta. There's position theta and portfolio theta. I keep track of my portfolio stats because it gives me a broader picture, not just like a micro picture of what the Greek means. So the reason why I have positive 1,000 theta, it's because I am short options, right? If you go long options like this one, then you get negative theta. And I think that's the mistake a lot of options traders make, is they might not have an account big enough, or they might not have clearance big enough to do this, or they might just not have the knowledge. They might just not know that you can do this as a trader, or it could be that their platform doesn't offer it. So there's a whole bunch of reasons why people don't take the other side of trades. But yeah, most people will go long options and they're gonna fill their portfolio up with like, you know, lotto tickets. And some are gonna hit, some are not. And sometimes you pick the wrong strikes, you pick the wrong dates. And time just destroys you. So instead of making 1,000 a day, you lose 1,000 a day on theta. And then 10 days goes by and your options are worth a fraction of what you paid for them. and then you're like, damn, I lost a lot of money, right? So that's why most people suggest against trading options, because they assume that that's what people are gonna do, right? All right, looks like the US dollar caught a bit of a bounce. Let me check what the Fed funds are doing. Fed funds are looking bullish. 10-year is looking bullish. That's good. Look at the VIX structure. The VIX index, why isn't it showing up? Okay, yeah. So VIX is up slightly, but the futures are down. Why does this Tesla split into two stocks? What do you mean it doesn't? I don't know what you mean. It splits into two stocks? Let's go back. I want to see what you're saying here. This is just one stock. Are you talking about the charts? Tesla went back up. I could short it again. Maybe do another round of this day trade. I'm going to give back all my gains. Watch. See, it's pumping. Am I going to sell into the pump? I can have the queues open and day trade the queues. See what the queues look like. Short the pump. Let's look at the 15-minute chart. Top was 123. You misheard because I remember Tesla used to be thought. Oh, they did a split. Okay, they split. They did a 1-to-3 split. So what that means is you have 3 times the share, but the price is divided by 3, right? So pre-split, this would have been about 400 pre-split, right? You multiply this by 3 and you get like 366, right? So it went down by a lot. It used to be 1,100, right? And I remember telling people when we hit 1200, I was telling my cousin, I'm like, I don't think we're gonna see 1200 again, not for a long time, because it was way too lofty of a price. But I didn't make a bet on that. I didn't short it. I was playing options with it, like here and there, short puts, short calls. Last month, I made good money on options with Tesla. And I'm still making decent, I think, on Tesla. Let me see where my Teslas are at. So this one, 68. This one, 55. 133 and 333. This one is the best. This one I opened it at the height of the sell-off. IV was like at 100. I'm like, this looks safe. You know, it's a ratio spread. It looks decently safe. And I don't think that I'm going to get in trouble for opening this. And I was right. So it looks good. And if we sell off to this range, I'll make even more. Because soon I'm going to get negative theta on that negative delta. There we go. So what's the other companies up to? Let me take a look at my main watch list. Let's sort by descending. I want to see the worst stocks. HKD, Lulu, Silvergate. That's not surprising. My biggest position is one of the worst performers. Wheat stocks are doing poorly. Okay. Now, who's doing really well? Gold. What's gold up to? Gold, 14 IVR. Caterpillar is pretty stable. Considering everything is rallying, Caterpillar, this is Dow Jones, right? I think this is also Dow Jones. I'm not sure. Coupa? No, probably not. IBM's Dow Jones. Dow Jones is relatively weak, it seems. Car is up. Ford is up. Apple up decently. Crazy. People were so bearish on Apple last week. It was like 124. Microsoft is up. Google. Tulio. Restoration Hardware. Looking at the IVRs. Intel Corporation. CCJ. That's the uranium guys, right? Marvel. Semis. Everything. It's looking like a decent day for everyone. Especially these low quality tech stocks like ARK Fund type stocks. Do I have ARK in here? Let me look at ARK. See how ARK is doing. Yeah, ARK is 6% for sure. So, you know what I can do? No, I don't know if I'll do that. Because I already have upside risk. I have upside risk with the Qs here. Upside risk with the SPY. So I think ideally for me, we go up slowly. And not all of a sudden.
Or maybe not. There's an argument.
That way I don't lose as much on the ratio spreads, but I still make quite a bit on the NQ call. I don't know. Looks like ARK is pumping, eh? What if this is a short here? What if this is an actual short on ARK? Do I have the buying power? I should. Okay. Okay, I still have it. It's only 50 shares. Well, we'll see. Maybe I'll flip that for a little bit of cash. What's the Q's NQ up to? Let me open up ARK here. Silvergate went back up. That's good. Yeah, ARK looks like it's going back down. But that's pretty much nothing. I need it to go back down to like here. Open up the NQ here. NQ was pumping. That's why ARK was pumping. And now NQ's selling off, but it looks like Tesla is not following suit. I want to look at the sectors again. XLY pretty much looks like Tesla. They look identical. Healthcare. Okay, healthcare. There's Biogen. No wonder why Biogen is doing so poorly. It looks like Biogen is relatively doing better than the sector. I think today is a good day. I think as long as my Silvergate position doesn't get worse and the IV goes down, I wanted to look at the IV here. So 11.44. Actually, IV went up. Crazy. Historical volatility is starting to go down. Okay, the Qs are selling off. Healthcare. Options. Tesla. Hold on. I was looking at ARC, right? Nice, I got a top take. Can you imagine? Let me see. Yeah, imagine that's the actual top. And we never see it again for a year. And I keep it. I'm never that patient. I always close, take small profits. I'm never patient enough to like keep something that's a winner for long term. Tesla's really pumping, eh? More so than ARC. Although ARC owns a lot of Tesla, so they're really correlated. Wow, look at the pump on Tesla. What's happening here? The volume is shit though. Volume is so low compared to like when we opened. I think everyone's waiting for the Fed tomorrow, the Fed speaker. Let me check Twitter, see if anything I missed. Oh, you know what? They're having a talk. Let me see here. Yeah, they're having a talk with the Fed speaker. .30 p.m. Is that too late? Starting soon? Okay, I'll keep this open. That might move the markets. You never know. What is this one? At the annual shareholder meeting,
Hello and welcome back to WSJ Live Q&A.
Warren Buffett urged people to buy $1 Trillion Triage. My book about... Oh, he's promoting his book. Interesting. I like to read books on economics. I'll consider buying that book. Although it being about COVID is very meh to me.
Your questions in the chat. I'll be reviewing those in just a minute. And we'll answer as many of them as we can. And we'll get started now with one of them. Khalid asks, Mary, how do you anticipate the first quarter of the year turning out for the U.S. economy? Do you see a recession on the horizon with the Fed hiking into what looks like a slowing economy?
So thanks for the question. So I absolutely expect the economy to continue slowing. That is what we've been trying to fashion, really. We knew that as we raised interest rates, that would bridle
Selling off. Is it correlated?
balance and bringing inflation
Is it
down.
correlated?
We're seeing
Let's
that
see if it's
slowing
correlated.
continue. We have been tightening, as you know, into a slowing economy because that's what's necessary to fully bring inflation back down to 2%. So in terms of the first quarter, my modal outlook is really that growth will continue to slow, the labor market will continue to slow, and that inflation will continue to come down. If that should transpire, then raising interest rates through those things and getting up to a level that we would stop at and hold for some period of time, to my mind, would be appropriate policy. But I will say right at the top of our time together that the Fed is very data dependent. We're completely data dependent. So while that's my modal outlook and very consistent with the summary of economic projections that we released in December, my views could change as the economy does different things, evolves differently than we expect. So I'll be looking at all the risks to that evolution.
This position is shit. I'm just going to close it. What is this crap position I opened?
So on that point, Mary, and for people who don't follow every twist and turn of the Fed, 4 times a year, you and your colleagues put out projections called the Summary of Economic Projections, or the SEP, that looks at where policy would go under a modal or a most likely economic outlook. And in the last set of projections in December, the inflation forecasts for almost everybody, it looks like, went up a little bit. And so I wonder, a number of people have asked me, why did that inflation projection rise in the last set of forecasts? What is it that you're seeing? Because the consumer price index in October and November was quite better behaved than it had been. So what influenced that decision to raise the inflation projection in December?
Well, that's a terrific question, and I'll speak for myself because I was one of those who raised my inflation forecast, and very consistent with how you saw the median of the SEP evolve. So why? Well, when you decompose the inflation data, it's very
Right. I'm going to BRB and listen to this.
Overall CPI is coming down. Overall PCE is coming down. Those are very good pieces of information. But we saw most of that action in energy costs and in goods prices, which we were expecting to come down because they would come down as supply chains improved and bottlenecks, were released. So those were pieces of good news that we absolutely need. About half of the excess inflation we observe in our country is related to supply disruptions. And so those supply disruptions improving is causing inflation to come down. What we haven't seen yet is core services come down in the way that we would like it to. And importantly, and really importantly, is that if you do core services excluding housing, it's because we have a pretty good handle on how shelter costs behave. We know that home prices come down first, that eventually trickles into rental prices, which eventually brings shelter price inflation down. And that takes 16 to 18 months. 12 to 18, really, depending on whose estimate you're using, but it takes a while, but pretty much we can forecast how that will evolve. It is the core services inflation, excluding housing services, shelter services, that just has shown no sense that it's coming down. And that has particularly historically been persistent and very highly related to the progression of the labor market and wage growth. So that's why my own forecast for inflation rose in the December SEP. It's because we see more persistence in some of the aspects of inflation that are just harder to bring down quickly. And I think what you're seeing is an agreement across FOMC participants that the inflation data have just come in more persistent than we had expected, and we have to build that in. Ultimately, policymakers are risk managers. We have to have a modal outlook, the most expected outlook, but then we also have to manage the risks. And right now, the biggest risk out there that would be very hard to untangle is that inflation expectations, which have held steady in the so far, would start to drift in response to more persistent inflation. And so we're determined, dedicated, united, resolute. You can use any of the words you've probably heard one of us say to to just remind people that we are committed to bringing inflation down to our price stability target of 2%. But it isn't going to happen quickly, and it won't be complete in all likelihood in the coming year.
So if I could stick with that. So it sounds like if you have an inflation dashboard, I don't want to oversimplify your remarks, but just to make sure I understand, if you kind of have three buckets that you're looking at, goods and energy, which went up a lot, coming down now, that's sort of helping you out. Housing, which hasn't turned around yet, but because of what you discussed on rents, you think it could help you out down the road. And so is it fair to say you're really focused on that third bucket, which is core services excluding housing, i.e. The labor market?
Yes, I think that's a good, people put them into different numbers of buckets, but I think those three buckets are really clear, and they do tell you how I'm looking at the dashboard. And so we want to see continued improvement in all of the buckets, but it's that core services excluding housing that so far hasn't brought a lot of relief. And that is very important to overall inflation coming down to 2% over time.
So, Mary, we saw a pretty substantial revision to wage growth in the hourly earnings data that the Labor Department reported on Friday. The last month or two had been revised higher in November, and then in December, the numbers all came in lower. Now, I realize you don't want to overreact to just 1 month of data, but if this more benign trajectory of wage growth is sustained, what implications would that have for your outlook on wage and inflation pressures and for interest rates?
So, if I may, I would like to take this moment to just talk about how I think of it from first principles, because there's a piece of the economy that we study way before we ever think of wage growth. Wages are just another form of prices. They tell you about the price of labor and they tell you what the outcome of demand and supply imbalances looks like. And so right now we have more demand for labor than we have supply of workers interested in doing jobs. That's going to push wage growth up and push it away from what are the steady state or the sustainable level of wage growth is, which is 2% inflation plus medium to longer run productivity growth. So when I saw the wage growth data coming down, that seems completely consistent with the fact that the labor market is slowing. We still have numbers that are well above what it takes to just hold the economy steady. We're making more jobs than we have new entrants or re-entrants coming in willing to take them. So we're still out of balance, but it is slowing. We are bringing demand and supply into a greater balance, and I would expect to see that in wage growth. So far the economy is operating much like I would expect, given the interest rate increases we've taken. So now the job is about working on that until the job is well and truly done, until the labor market is in sufficient balance that wage growth realigns itself with 2% inflation and productivity growth. And then we see that pushing through to price inflation. And all of that brings us back down to that 2% target on price inflation that we've talked about. So that's how I see the economy working, and it's why we pay attention to wage growth, but I pay attention to the inputs to wage growth, which are labor demand, labor supply.
Now, money markets have reacted strongly to these revisions of average hourly earnings. And also on Friday, there was a sizable drop in a widely watched survey of business purchasing managers for the service sector, especially in the leading new orders component. The market has an assessment right now that you've basically done your job and that you don't need to tighten as much as you projected just a few weeks ago. Now, when you and I did this conversation a year ago, you told me that those interest rate projections, the dots, are only good on the day that they're submitted. So why shouldn't the wage data and some of these other reports we've seen lead now to a downward revision in your rate forecast closer to where the market is?
Well, there's really two, maybe three reasons. Let me start with one and see how many numbers I get to. So the first one, and you're absolutely right, the dots are only as good as the day that we print them. So the question is, to what extent do my dots, as we would call them, do my projections change as the incoming information came in? And so for me, what I see is it's 1 month of data. You said that right out of the gate. It's 1 month of data. I don't think we should declare victory on inflation, on the labor market, on any of the things that we're seeing based on 1 month of data. Second is, if I asked us all to do this thought experiment, so I'm going to ask us all to do it. Imagine you don't know anything about where we've come from. You just know, you look at the data we have today and you see unemployment's historically low, jobs are being created at, we're adding about 100,000 more jobs per month that we actually can sustain with new entrants and re-entrants to the labor force. And we have inflation at high rates and,
All right,
painfully
I'm
injuring
back. This is very insightful. I like listening to this.
Americans who
Very
really are
relevant.
strapped to find ways to substitute across to continue to live their lives and increase their well-being. Most people would say, wow, the Fed's really got to do something. The economy's out of balance and we need to fix that. And so I think importantly, we need to separate the fact that, yes, we do have good news coming in. Yes, we are seeing monetary policy transmission working. But it's really too soon to declare victory on this. And if you declare victory early and stop, you can find yourself in a much worse situation down the road. And that's what happened in the 1970s. And we found ourselves with the need to do the Volcker disinflation, which was necessary, of course, but painful. And I don't want to put the economy in that situation.
So that's what I'm thinking.
And I would return us all to the
That's
level
why
of
I feel like
economy
shorting some of
still out
these.
balance. Demand for laborers still outstrips supply by quite a lot.
I agree with her.
Demand for goods and services is still outstripping supply. So we still need to bring those two things back in balance so that we can have 2% inflation. And ultimately, this is really how I think about it. We want to return the economy so that to a place where Americans, businesses, consumers, communities, they don't have to think about inflation every day. When I'm out there in the community, that's the number one topic on people's mind, inflation. It beats out recession by quite a lot.
Everyone in your position says that they're mindful of the lags of monetary policy.
Sure.
What is being mindful of the
Tesla's
lags
pumping. I feel like opening a short.
Does it mean, for example,
Gonna get my
that you
face
slow
ripped.
down or stop raising interest rates absent clear signs of economic weakness in the data? People ask me all the time, if you wait to see signs that the economy is rolling over, doesn't that mean you'll have gone too far, that you'll have overshot?
So that's a terrific question. So I look at this many, many ways, try to get empirical information about lags, but also just you have to use...
Is she moving the markets?
So let's start with, there are lags in monetary policy. We don't actually know how long they are. What we do know is that the speed of transmission from when we talk about our policy to where markets price in the policy...
Elon? Yeah, he's been relatively quiet.
It's almost immediate. We say something, markets put it in, that you saw that in the...
I think it's just a relief rally. I think it's going back down eventually. But we might have a really violent rally in the meantime. But long term, I think it's going down.
But there's still this piece between
too many headwinds. Way too many headwinds.
And we've seen it.
And Elon is affecting the stock too.
We raised the interest rate starting March of 2021.
Too much pride and arrogance, and yeah.
It's interest sensitive. Other interest-sensitive sectors respond, but only now are we seeing.
There is positives to Elon, but there's a lot of negatives.
Employment growth and slower wage growth and slower demand growth more generally. So that's what the lags are. You can hear just by my description of them. We don't know a precise number of quarters, so it requires intense study on a regular basis. I would say that's basically the definition of data dependence. But the other thing that I use, and I found this very helpful, is San Francisco Fed researcher Andrew Forrester, along with some other colleagues of his, have done something they call the proxy funds rate.
Negative
Theta. It
Theta.
just recognizes that not only is our funds rate that adjusts that's important for policy, it's also our forward guidance and our balance sheet policy. And his own estimates would put the proxy rate well above the funds rate we have in place right now. And so I'm mindful that right now the funds rate is actually higher. And it's why we're seeing the economy slow, in my judgment. So what I'm looking at is we don't need
Never
to
heard of
see
this.
inflation get to 2%. We don't need to see inflation.
So they see it as
even
higher.
get
That's
necessarily
crazy.
down to something within a stone's throw of 2% before we would stop raising and simply hold. But this piece right here, this phase 2.
Oh wait, this is an old
is
chart.
extremely challenging, right? The phase 1 is raise the interest rate until you get it into some
Oh shit,
sort of
NQ selling off.
that part is complete. Now we have to raise the interest rate just enough to
Tesla was
be able
pumping
to
hard. I could have shorted it
keep
here.
the economy bridled sufficiently to bring inflation down. That is going to be challenging to find that rate, and so that's why I said at the top of the hour that starting point is the SEP, putting it between 5.25 and 5.5 and
Hey, Letty.
reserves. That's a reasonable place to start, but we're going to need to go in and imagine as the data roll in, do we need to go higher or can we stop a little earlier? I think something above 5 is absolutely, in my judgment, going to be likely. But when I say absolutely going to be likely, I still have uncertainty bands around.
Should I do it?
That's where I'm
We're at the top of the
my own
range.
projection is we'll need to go above 5. How far above 5 we need to go, not completely clear. But importantly, we have a lot of data coming in, and we have meetings. In
Okay,
which
I
we
like
make
to
papers.
combine
I think
that
this is why you'll hear a lot
with
of us say
XLY, but I'll keep
meeting
it.
by meeting. It doesn't mean we wait to decide till the meeting's upon us. It means that we don't want to forecast a set of decisions.
This one
that
is
have so
shit.
much
I might just
uncertainty
close
attached
this.
to them. That would in fact be imprudent. So what we're really trying to communicate is our reaction function and how we respond. And there, I think it's really about looking at all the data and seeing when do we have some confidence that inflation is on the path down.
So you and your colleagues will have another meeting in about 3 weeks, and I want to ask about that meeting. Do you see the need for another 50 basis point rate increase, which is what you all did in December, or do you think that the data now and being mindful of what you've done could allow you to support shifting to a 25 basis point increase instead of 50 at the next meeting?
So heading into the next meeting, I see those as both on the table, 25 or 50, and it really is about incoming information. And we have another CPI report coming out next week. I'll have many. I get out to the district after the new year, and I'll be talking to my boards and my councils and my contacts and having roundtables, really gathering up the information, not just about the backward-looking data we've been observing, but also the forward-looking views that they have about how the economy is shaping up and how they're going to put money to that by investing in their firms or cutting back. And I need to know all of those things before I can really decide.
Yeah, this one doesn't want to go down.
Because ultimately, those are just the tactical ways we're going to get to the place we need to be. I think this is why
15-minute chart looks very bullish on Tesla.
Conversation from pace to level. Where are we going to land? And when I think about where we're going to land, then it's somewhere in above 5. But when you're being seriously data dependent, doing it in more gradual steps does give you the ability to respond to
7%
and account for those lags. So that's how I'm thinking about it. But again, I want to be data dependent, not wall off a 50 basis point increase is not likely because we just don't have, we haven't even seen the CPI.
Underweight?
So we get
Damn.
the CPI on Thursday, and a lot of the people who put point forecasts forward are projecting that the headline figure could actually decline, which would bring the year-over-year number down somewhere to the low 6%. Of course, it had been up as high as 9% back in June. If we were to see a pretty soft CPI Thursday, similar to what we saw in the last 2 monthly prints, I mean, would that be enough for you to say, okay, maybe we can slow to the more measured quarter point rate increment that was more traditional for the Fed?
Is that Nick Timmerhouse?
I'd like to take a little more nuanced look at the CPI that's coming in and tell you exactly what I'll be looking for.
Yeah, it's Nick.
So, of course, I'd like to see the overall come down. I mean, that's just direct relief to Americans who have been struggling painfully for many through high inflation. So there's nothing but positive information there. But when I'm thinking about policy making, I'm thinking of what is the underlying inflation and not just how do I get it from 9 to 6, but how do I get it to 2? So I'm going to be paying a lot of attention to core services ex housing because I'd like to see some improvement there or at least no acceleration. I'd like to see some sense that we've got some momentum in that front as well. And the wage growth numbers coming in give me some hope that we will start to see that behave better, behave more consistent with its historical trend, and help us gain confidence that we're going to be able to get back down to 2%. So yes, it would be so welcomed if we continue to get the headline to come down. That is absolutely the case. And it won't be the only thing I'm looking at as I decide about what optimal policy is going forward. And I think it's also important at this juncture to say that it's, the meetings are not, they're really, let me say what they are instead of what they are not. They are really live meetings. They're important times for us to go and debate and deliberate with each other so that we can come up with the best policy that serves all Americans. I mean, all of us who are participants, and we have a full committee, have different walks of life we've come from, different trainings we've come from. We have different people we speak to on a regular basis. We're all trying to assemble the information. And so prejudging what we'll vote for or be supportive of before we get there to discuss it with our colleagues is really not, to me, best policy practice. So that's why I'm not trying to hedge here as much as I'm trying to say this is a critical part of our deliberations comes at the meeting. So we're going to wait for the data and then go to the meeting and think hard about, is 50, 25, those are in the range of what I think is the most likely. Which one of those would we choose? But we're all committed to the same thing, being resolute to bring inflation back down to 2%, and importantly, do it as gently as we can so that we cause as few Americans additional pain. I mean, so many Americans are already in pain from the high inflation. But when you lose your job as the economy slows, that's also painful. We have to balance those things as we go forward to ensure that we're doing it as gently as we possibly can.
So then what is the argument? Is there a strong argument for doing 50 at this next meeting? It sounds like everything you just said could be an argument for doing 25.
I can argue on it. I'm an economist, so I can give you arguments for either side. But so why would you, just talk about what's the argument for doing 50 versus 25? If you thought your level might be higher down the road, you thought the inflation data just weren't cooperating, you thought that getting there sooner would be better. For me, when I look at that, I say there's a case could be made for either one right now. And what I want to really do is get with my colleagues and debate and deliberate and
Tesla's selling off. I can take some profits. $12. Wait till it goes lower.
About how we do it. And mindful works both ways. We have to be mindful that there are lags in monetary policy and that we have to be conscious of those lags so that we don't create an unforced error and over tighten only to cause people pain that was unnecessary. So absolutely mindful there. And that might cause for a more call for a more gradual pace. But we also have to be mindful about the fact that if inflation gets embedded into people's expectations, if they start expecting that inflation is going to be high, so they're forever asking for
The US dollar is looking ugly. I don't like it.
Well, that's something you absolutely want to avoid. I have not seen signs
So
of a wage
ugly.
price spiral. I haven't seen signs
Wow,
of inflation
look at that.
expectations drifting, and I think a lot of that owes to the fact that we've been resolute. We're going to bring inflation down. So I want to be mindful on both sides. That means data dependence. That means talking, looking at the published data, talking to our contacts, and talking with each other, participants of the FOMC, to really try to do our best to create optimal policy that works for the economy overall and all the members of it.
In the economic projections last month, you and your colleagues put down where you think the unemployment rate would be at the end of this year, and that projection was at around 4.6%. Now, turning to audience questions, Michael asks, is the Fed predicting what will happen, or is it telling us what it wants to have happen? And I wonder about that in the context of this higher unemployment rate. Is that the Fed saying actually the unemployment rate needs to rise here?
So what the projections are, and I'll speak about how I write my projections down. When I write my projections down, I go through this exercise. It's a rigorous exercise, looking at models, talking to contacts, talking to my teams, etc. And we say the following: in order to get inflation down, what do we think we need to do with the policy rate? And we look at the labor market, of course, and we find, that's very, very strong right now. We have more job openings than we have workers able to fill them. That means that we have to raise the interest rate like we have been in order to get that part of the economy back in balance. I'm reassured by the supply chains improving, so that takes that worry off the plate a little bit, diminishes it anyway. So then I write down the policy path that I think is the most likely policy path to get the economy back in traction or back in a sustainable pace. Then we look at what impact is that going to have on the labor market? How likely do I think it is that the unemployment rate will rise? And there we're really balancing off what you've seen as two ends of a spectrum. Then those ends are so extreme you wouldn't think that they would, it's not either or, but the middle is where it is. Will it all come out of vacancies? Will we have some miraculous tightening of the economy that only decreases the amount of posted vacancies that the economy has and doesn't improve or increase rather the unemployment rate at all? So I think the vacancies are going to play a large role, but I don't think it's going to be everything. And I also think it's not going to raise the unemployment rate.
Oh shit, it's dumping. What the hell's going on?
That
Is it something she said?
So that's why I put in an estimate of around 4.5, 4.6. And that's what I expect to happen.
The NQ is slowly dumping here.
The additional ones
Dollar's going up. Let's look at the Fed funds. They haven't changed.
That's what I
wow, the dollar's really going up. That's a huge 1 minute candle. The NQ is going off the charts.
And remember, an unemployment rate of 4.5%.
Oh, shutdown.
4.6% is not out of historical.
Democrats warn of potential shutdown.
It is a temporary phenomenon. It's not
is that it? Dollar's going up.
It's just a balancing of trade-offs that we face between.
My Tesla short is up 27 bucks. I can take it. It's going to help balance out the losses from Biogen. I might just close down Biogen now. I have no confidence in this pick. Don't know why I picked it.
So those things mean that we can just, our potential to grow is slower unless we have increases in productivity that allows us to increase output without.
Dollar's going up. That's crazy.
We're in a quandary right now in the U.S. and it's something that the Fed doesn't have the levers to fix it, but the barriers to labor supply, labor force participation are there, and we're seeing the effects of those things.
To follow on that, how much evidence of sustained disinflation or
dollar is pumping
will the Fed, would you want to see before you decide that maybe such a large increase in the unemployment rate won't be necessary, that appropriate policy won't actually cause that?
My NQ is not as good as it was before. Let's see.
So one of the things
still pretty
that
good.
I really need to see is the labor market to come back in balance. So we would be narrowing it to say, well, the labor market can come back into balance by just firms not looking for as many workers. And I think that's going to be a big part of the conversation. It's a big part of the outcome, right? It's why the unemployment rate isn't forecast to rise very rapidly like it has historically. It's because a lot of this is just going to come, firms are going to say, look, we just are going to slow our pace of hiring. So that is
looks like we hit this Fibonacci level.
When firms actually lay workers off. And that's how I think this will work. If the unemployment rate comes up less, then that would be terrific. I mean, that obviously, if I'm thinking about doing this in an ideal world, which we do not face, by the way, you would want to bring
dollar's going up. It hasn't been this high for a while.
But we don't face
since
that.
earlier today.
Demand and supply out of balance,
Tesla's coming down.
So bring demand in balance with supply, existing
Biogen is stable. Silvergate's coming down. That's not good. But it's fine. I think it's fine.
See a lot of labor supply growth here, and that means that we're going to have to bring labor demand back in balance, which is going to.
I might take profits on Tesla.
Produce some increase in the unemployment rate.
So, Mary, we're almost out of time. I want to try to get in one or two more questions here. These are related. Lee asks, I think the question on everyone's mind is, when will inflation decline to 2 to 3%? So my question I would put to you is, how
should
long
I take the profits here?
How long does it take to get inflation back to 2% using the Fed's
These aren't changing.
Inflation page, which is the PCE index?
You know what? Maybe they changed a bit.
My own projection is that my modal outlook, the thing that I think is most likely, is that we'll get into the low 3s by the end of this year, which would be welcome relief for Americans facing high inflation that's not been anywhere close to the low 3s. So, and then get closer to 2% by the end of 24, and then get into 2%.
Dollar wants to go up.
In early 25. So that's the the future I see, I mean, the main message is there is we could find ourselves, working to bring it. It might end up that there's more persistence than I've factored in, and that would require more policy actions on our part. But the idea that we get inflation down to something close to the low 3s by the end of this year and something close to the low 2s by the end of next year, to me, those seem like our commitment to restore price stability. That's the promise we've more or less made to Americans, that we're going to do our very best to, within a reasonable amount of time, restore price stability, get inflation down, and get the economy back on a sustainable path. So relief is coming, but
maybe I take the NQ profit, and that helps me close the Biogen.
That I'm just unwilling to put forth, given that we already see some relief going through in
Or I can wait till the speech tomorrow. The speech might be massive. I think that's the reason I got it. Or no, the CPI. But the speech might be bearish though.
To balance our two objectives.
I think taking profits never hurts. And I don't need this hedge that badly. So let's see if I can get a good price.
The question here is, the 2% inflation goal is calibrated in the era of globalization. Do you think that the 2% goal needs to be recalibrated as we enter
What the hell?
the era?
It's not giving me a fill? Okay, I took some profits there. So that's fine. It never hurts to take some profits. Hopefully now we sell off because I don't have that upside anymore.
That is being on the table at all.
And selling off would be good because then I get my dollar. And this hopefully stays stable. Hopefully healthcare doesn't move.
We're right still in the process of sorting all of that out. So the thing that I've learned in policymaking and as a researcher, as an economist, is it's every single time we have a cyclical change, it is everyone, we're all very quick to say, well, this is probably going to change the world. It's always going to be like this going forward. And caution is our best approach right now. So I see no evidence right today that we should be changing the inflation target. Apart from it's always a very bad idea for credibility to change numbers, to change your goalposts when you're in the middle of trying to achieve it. We are in playoff season for football or any sport really you can think of. You don't change the goalposts in the middle of
what's happening? Dollar keeps bumping.
But on a more serious note,
Tesla keeps dumping. Let me see the 15-minute chart on Tesla. Let me take off after hours. Go for a 4-hour chart.
Little impetus for that discussion. So for me, it's not even on
this has been resistance. This has been a technical resistance for a while. And it's possible, when you look at it, that I've top-ticked it, right? And if I've top-ticked this, I can potentially turn this into like a $500 gain, right? But I don't have the patience for that. I swear I don't. I'm gonna take profits. Even if we hit like here, I'll be happy to take profits.
Same for us. And to our audience, if you missed part of this event, the full program will be available to rewatch on our live Q&A page. And with that, I want to thank all of you in the audience.
Selling off. Selling off. I sold it at a good time. I sold it at a good time. Okay. As long as Silvergate doesn't sell off too much, I'll be happy. Cool. Okay, that was good actually. You know what? I think that was very insightful. I'm gonna watch it again tonight, and just parts of it I was distracted. I was looking at the charts. But I want to understand better how these Fed people think, you know what I mean? Because what you want to do as a contrarian or a person who sells markets like I do, what you want to do is you want to look at how they talk and what the market price is in, right? Because currently there's a gap. The market price is in one thing, but they say another. And then you want to arbitrage that, right? And you want to be on the correct side. These guys are smart. I like these guys.
It's just it's something I would rather.
I want to see what they have to say.
Or rather add when I have all my capital allocated. If I have all my capital allocated, I'm like, okay, I want to put a position on our natural gas. aggressive. Let's see what we can do. And even then, I'm super careful. I don't trade the near-term expirations. I don't trade undefined risk if I can avoid it. And if I do trade undefined risk, it's like when the break even is very, very wide and only one side.
Tesla's coming down. NQ's coming down some more. That's good. Let's see. I did a good play today with the NQ. Timed it really well.
Understandable, that's the winter time, but going to May.
This would be a good time to go long another 25k of this.
So yeah, it's just one of these things that
Tesla, I can take profits now if I want to. $50. I've had so many like small day trade losers that it feels weird having a winner. And Biogen's not selling off, which is good. This is like 1/10 of my Biogen loss. I can take it. I can book it. But things are trending down. Why would I book it now? Let me put a stop loss maybe. Maybe mental stop loss here. And if it goes back here, I close it.
I think actually, if you do, no, you can't do that. If you look at the ETF and then you do .IBR, you will actually see the historical. You will see the actually it's not a very good chart, but oh wait, actually hold on a second. It is. There we go.
You said UNG.IBR?
UNG.IBR. It'll show you.
I have it up here on the screen.
Yeah. All right. Yeah. So looking at it this way, like you said, Chris, it's sitting at 55, which it updates with the natural gas futures basically 1-to-1. But it's still not. It's at the middle of its range. Like it's been trading.
You know what's potentially a good play right now? So I've been following Lululemon for the past few weeks, and what happened was they had earnings. The stock was around $345, and the earnings was mediocre, but they announced that they had like 85% inventory or something. Like inventories were full. So the stock tumbled to like 325, like it tumbled like 20 plus points, and then it stabilized there, and I knew when it went back up to 330 that it was a good short. That's why I opened these long call spreads, right, which are fully profitable now. But just today they announced profit warnings over holiday sales. The dollar's pumping. This is really good. So what happens is it was foreshadowed in the earnings with the inventory that they would have trouble with profits. And then today they came out and they made that announcement that they are having trouble with profits because of holiday sales. So I think the next step is going to be downgrades. So I think I've already seen one today. Yeah, I've already seen one. Well, actually, this is outperform. Holy shit. I have to check the dates on these, because why would you outperform them on all these horrible news stories? So I think next it's going to be downgrades, which is going to bring the price down even more. So potentially, I think I'm going to keep that top of mind for maybe a play on Lulu once they you know what I can do? I can do the strategy I was talking about earlier. So I might actually open one. Let me see here. Dollar is starting to go down, but I want to look at the chart. I don't want to open one if we're at the lows of the lows. I would open one. Yeah, we bounced a bit, I guess. Wait a second, did we actually go down to 280? I don't believe that. That must be after hours. After hour nonsense. I don't know why it shows that. It confuses people. It went down to 289. Are you joking? That's so bearish. Holy shit, that's bearish. Bro. Okay, I'm gonna try one. Okay, I'm gonna make it small. Okay, it's gonna be a tiny position. but I want to study this position because I think, I may be mistaken, but I think it's a great strategy. Okay, so what I do is I go really far out so theta doesn't get me. Okay, I sell a put, okay, anywhere. We'll look at the performance graph after it's open. Okay, so this here costs 3,000 to open. So what happens is, okay, if we stay down, okay, if we stay in this area, if the stock underperforms, which I think it will, we will make a $50 spread, which is 5,000, but we are paying 3,000 for this, so we're making 2,000 profit. Okay, so the idea is that my outlook on this ticker is bearish. So my outlook is that we're gonna stay down here, we're gonna sell off, and it's gonna be bloodbath. Now, if I'm wrong and we rally to 360 and I'm like, what the fuck did I just do? Am I an idiot? I'm a fucking moron. The idea is that I'm gonna close the short put, take all the profit from it. It's gonna be like 2,000 profit, and then hold the long put with the idea that it's a temporary setback. I still have 50 days or however many days, and I can hold on to this and wait for a reversal down. So you make money on the way up and then you make money on the way down. Now for that to happen, everything has to go in an ideal manner, which is unlikely because the odds of it doing all of these actions is low. But we don't need that. We can have it just go down and we still make 2,000. And we can have it stay range bound. And the good thing about that is that even range bound, you'll make money because it's gonna have positive theta. So you make money every day with it being range bound. Except if it goes up in price, then your theta goes negative, so you lose money. But if it goes down, then you make more money. So it's a play, but I'm not convinced that I'm going to take profits here. Looks like it's setting up for a bounce, maybe. Maybe you hold it. Let's see what this looks like. 5-minute candles. It got a bit of a bounce. So what I think I'm going to do is before I create the position and invest this like $3,000, what I'm gonna do is actually just read about it some tonight. I'm gonna maybe do a little quick dive on the ratios, and I'm gonna do a comparable, and I'm gonna try to find literature. Look, I think I closed it at the perfect time. I think I'm being lucky today. I opened it here and I closed it here, and imagine we bounce back. What if I buy one here, try to make money on a bounce? It's luck, I swear. There's no skill in this. Anyone who says it's skill, they're just very lucky people. It's luck. Even like the NQ that I bought, that I closed for 200 profit, I closed it like halfway through the drop. I think that's luck too. There is like, there's technique, okay? There's technique, and I guess knowing the techniques is a skill. So it's a combination of luck and skill always. But luck's a huge, we're all guessing, I know, right? I'd say it's luck on a short-term time frame, you know what I mean? That's why day trading is hard, because it's very much luck, you know what I mean? I shorted here, it could have gone up to 126, you know what I mean? And you know what? I bought Biogen and it could have gone up, but it went down, right? I can afford closing this, but I think because I've earned and I've realized this gain, it incentivizes me to maybe keep it and just see what happens to healthcare. Like at the worst case scenario, it's gonna be XLV exposure, right? XLV's down 1.2 and Biogen's down 1.3, right? So it's basically just XLV exposure. It is beta, so that means that if the markets go down, then XLV will go down. But they say healthcare is defensive, right?
Powell tomorrow, ahead of inflation on Thursday. Certainly, if Powell comes back and does one of his speeches where he's like, financial conditions are too loose. No one gets it. We're still tightening.
Or maybe I can open a small one with that Lulu play. Maybe just go for it. Maybe not 3,000. That was like exaggerated. It doesn't have to be that big. Let me just see. And it doesn't have to be that far out either. This is like a safe way of doing it. And it doesn't have to be at the money. It could be out of the money. You know what I mean? But then you're looking at a small kind of reward. Unless it sells off a lot. You can do this, right? So this is a $50 spread for $16, right? And then if we rally up, I close the short put, and then I keep this. I think this is way more reasonable than the other way around. And it's 130 days out. The hard part with a play like this is that you have to be patient. And one thing that I hate, when I look at this little chart here, I don't like seeing the same position all the time. Like this pisses me off. RSX, it's been there for a year. Like I can't even get rid of it. It's been halted for a year. So especially if it's a losing position or a position that just doesn't fit, you know what I mean? Like these calendar puts, I don't like seeing these here. They haven't changed in weeks, so I just don't like seeing them. That's the thing. It's like psychologically, I want to have some long-term positions, but I don't like always seeing them. But I think it might be smart because, I don't know. Let's see. I'm going to maybe do it. 1675. Yeah, do it. If we sell off, I benefit some from it. I need to write these down. I haven't been writing down my new positions. Hold on. What's going on? Mid? Let's cancel. I'm confused. It's selling off though. I should have, I think it's because it's selling off that I see now it's in the money. Actually, no, wrong date. You have these things in your portfolio? I know. No, I can't. I can filter for what I want, but I can't filter for what I don't want. You know what I mean? It sucks. 1683. Okay, so 1683. Okay, I got it at 1681. Let me write this down. I want to stay disciplined with my tracking of stuff. But I don't have the sheet open. Hold on. My bad. I'm going to open that sheet. I think it's this. Hold on. PT, raw ticker, trade overview. Yeah, it looks like I have them all. My P&L went up a lot, eh? As soon as we sold off. Damn. That's what happens when you're bearish. Okay, so this was Lulu. But you know, there's one problem with this position, is that I don't start with positive theta because it's out of the money. Maybe a little bit of positive theta. Okay, how many days to expiry? 39? Yeah. 39, 2023. Short put spread. How much was it at? It was at 299.86. What's my average price? $1682.5. IVR. IVR must be high. It's moved a lot. 13. What the hell? Sometimes I don't understand IVR. This shouldn't take that much power, buying power. Basically, how much I paid for it. 1703. Okay. Size is 1. Alright, see what these guys. That's loud.
If you're familiar with the concept of margin, you are likely so because you've traded stocks in the past. In a traditional equities margin account, the margin essentially represents
Tesla's going up.
from your financial institution. In that
XLV's going up. I knew I should have taken the bounce here.
and is substituted in the form of a loan. It's not exactly the same for futures. In futures, the margin amount is viewed as a performance bond, one that helps ensure both parties fulfill their obligations in a transaction.
Where's SI? SI went down though, but the premium went down. That's good.
Trading course, the beginner futures trading course by
Premium went down as the price went down.
learn courses, beginner futures, and you can work your way through the margin section here on this. Of course, we'll be back with more tomorrow.
Oh, they're done. My biggest risk is still Silvergate, and the fact that the price is going down isn't good for me. But it seems to be going down with the overall market. Like the Nasdaq just went down like, I don't know, 0.5% or something. Definitely took a beating. So it makes sense that, let me look at the Fed funds. Still looking bullish. What else? Sectors are all green, right? Except P, staples. But it's mostly healthcare. I can't believe it. The one sector that I picked is done on Friday. Tesla's going up. Coinbase is 16%. Wow. I should have doubled down on my Coinbase positions. Look at that. Damn it. Because this was almost already fully profitable, this bounce didn't even make me that much money. It made me $70. Should have been more bullish. But what I'm going to do is, with Coinbase, I'm going to do a similar strat as I did with Lululemon. But it's going to involve a ratio. And I'm going to create a bullish ratio spread on it. I still have buying power. Maybe I can do one right now. After a 16% day though, it doesn't sound great. Because I do expect overall bearishness over time. But the thing is that I'm willing to defend a position in Coinbase because of how much cash they have. I'm kind of confident in their ability to, you know, withstand a huge drawdown. But I think because, I don't know, it's a bad timing. It's like a 16% day. You should do the opposite now. Right? And I don't want to pay for anything either. You can always have a 1-to-3 call ratio, which helps in some ways because what happens is you have 2 extra, right? So, and you have, it's a 2.5 spread. And then I would be able to sell like 30 of these. No, that'd be a lot of nominal cash, so no, of course not. Like 10 of these, even that would be a lot. Because that would be like equivalent to 3,000 shares if I go long. 3,000, it's definitely doable. But 10 of these would be a lot of buying power. And the key thing is, it's not that it's a hard position, I think it's a really easy position. But the thing is, we've sold off, we've rallied so much already that there is going to be some give back. You know what I mean? And you can open after you have that give back, right? Bro, we almost hit like 40. Crazy. There should be some retracement downward after such a move. There's already been maybe a little bit of a retracement. Let's see. How much is this? Take a look. There's been like a 1.6% retracement. So maybe this is an opportunity to just short shares. Maybe there's going to be a reversion to the mean, but Bitcoin is a little bit uncorrelated, right? If Bitcoin rallies, Coinbase will rally, right? So Tesla's selling off. Okay, good thing I didn't take the long there. I didn't go contrarian. But let me look if I can think of another strategy with this. With Coinbase, there is the option of I don't even know. I'm just like, the cool thing about options is you can just play around with it. Like the limits, there's no limits to what you can think of. A lot of positions are impractical, but you're not limited to opening it. These are stupid. Let's see what else I can think of here. I don't know. I can't think of anything better than just a short put or a short a ratio spread. Maybe a long ratio spread. On the long side, there is juicy premium, but not juicy enough maybe. Maybe after another few days of rallies, then I would open one. I think it's early. Although it is a 16% day, right? That's insane. If you're betting on a retracement, then it doesn't hurt to have a call ratio spread, because if you believe that there is going to be a lot of exhaustion here and the stock's not going to be able to go up much higher from here for X, Y, and Z reason, then you can consider doing a ratio spread. It's relatively, on the safe side, but premium is low unless you go far out. Premium, yeah, if you go far out, premium is low. If you don't go far out, then you risk, you know what I mean? You're closer to at the money. There's a 33% chance that it reaches and it stays below here. So it's like, do you want to take lower premium up front and higher probability? This is 80%, right? Actually, even more, because my break even is further. This is like 10% probability of losing on this. I can get 33 bucks up front. It's gonna be a little bit of a downside hedge, but I already have a lot of short deltas, right? But I think my short delta calculation is very biased because of the US dollars. That's what I think. That's my theory. Because I have a feeling here it's all balanced, and if I close the US dollar, this won't show as negative. But the problem with including the US dollar to this calculation is US dollar sometimes just moves on its own, right? It's not always directly inverse beta. But so far so good. I got it up by 500 bucks. Taking the gain, I think, is key sometimes. Like when my Silvergate was super profitable and I didn't take the profits is why I'm struggling, since the end of last week. Sometimes you just gotta take the gain Like this iron condor was in the money last week, early last week. I could have taken the gain on that. But it's a, you know, it's calculated risk. You know, if you think you can make more out of it and you're betting on it, then and you're already up and you're like, well, I'm already up. What's the most I can lose? Let's try to make more on it. It's understandable. Silvergate hedge is working. I want the hedge to make money as these lose value, which is what's happening, right? The hedge is up $96 today, and these are down a combined like $400-ish today. So this is good outcome for Silvergate. Overall, everything else is fine. Qs we sold off, it's good. SPY, this position is safe. I think, you know what? If we reach 410, I'll be in trouble-ish because the dollar will sell off and I don't have a lot of upside hedges. That's why I had the NQ, right? So now I do risk like a big rally, these positions. But what I might do is if we have a good CPI print and whatnot, I'll open another hedge. You know what I mean? If it starts to look bullish, I'll open another hedge. Maybe I'll think of a QQQ hedge or something. QQQ is the closest to at the money, but it's only a 1 lot, right? This is a 3 lot. This would hurt more. And this is also 390, 410. But SPYs, I think, are more safe. I think this one is a bit more at risk. I don't know. Let me look at the MNQ again. I'm confused. I want to save this too. $11 a.m. There's a lot of ways I can take upside, right? I do have the Biogen that's kind of upside, even though it's uncorrelated. Let me look at US dollars. US dollars. Let me check Twitter. Maybe I'm missing something. I want to reopen CNBC also. Gonna BRB.
Over the last few weeks, there's a lot of folks betting that the Fed won't be able to hold that line, that they might get to 5, but they may have to quickly pivot, quickly begin to cut rates, particularly if the economy does head into a downturn.
Yeah, bad data is good news for markets until the data is so bad that the Fed has to move even higher. Mary Daly, the latest Fed official, who says that perhaps the terminal rate will be above 5% before that pause. So for more insight, let's bring in Mark Zandi. He is chief economist at Moody's Analytics. And Mark, I want to start with the latest data that we got, whether it's ISM services or the jobs report. Is this what a soft landing looks like, a slowdown in wage growth and a lackluster services industry? Is that what we're getting right now?
Yeah, that would be descript, roughly descript. We need to see a further slowing in the economy, particularly the job market. I mean, we're abstracting from the vagaries of the monthly data. We're around 200, 250K per month in. We need something kind of sort of close to 100K, maybe a little south of that to get unemployment up a little bit and get that wage growth in. So, I think the job numbers on Friday and the other data we're getting is consistent with, I'm not sure soft landing is the right word, Scarlett. I don't think it's going to feel soft. It's going to be, a little uncomfortable, but I think it's enough to avoid an outright economic downturn.
What about the length of, I guess, some degree of an economic downturn, Mark? I think the market seems to be betting that if we do end up in a recession or close to it, that it will be relatively short-lived.
Yeah, I mean, I think I can make a really strong case that we won't go into recession because the economy's fundamentals are good. There's no major imbalance in the economy that typically prevails prior to recession. Leverage among households and businesses, there's pockets, but in aggregate, leverage is low, debt service is low. The banking system's in great shape, highly capitalized, very liquid.
Yeah.
Real estate markets are in pretty good shape. The housing market's underbuilt, not oversupplied.
Yeah.
State and local government's in good shape. So, that would suggest no recession. And if we do go into recession,
right,
we would argue for a mild short one.
Okay, well, that seems great for the economy, Mark. I am curious what that means for inflation and the Fed's fight against it. Does that help or hurt it?
Well, at the end of the day, that won't happen unless inflation comes in. So if inflation does not continue to moderate, continue to go steadily back towards the Federal Reserve's target, then the Federal Reserve is going to have to raise rates much more aggressively, keep rates higher for longer, and we will go into recession. So a necessary condition for no recession or whatever is dead ahead of us is without recession is getting that inflation back in. That's critical to all of any optimism that one might have for 2023 and 2024.
Mark, I'm reading a lot of comments about the Inflation Reduction Act being stimulative. What does that mean in terms of how and where will we see the impact of that?
Yeah, I don't view it as stimulative. I mean, if you look at the net impact on the deficit, it's basically neutral. I mean, you get some support from the tax credits, but there are tax increases in the legislation to help pay for that. It's in fact to pay for it. So the net of all that is no significant impact on the economy in the near term. In the long run, obviously, it's very positive in terms of its impact on climate risk and climate change, and I think that's really important. But in the near term, I don't think it's neither here nor there with regard to needs for growth.
Okay, long-term stimulative that perhaps doesn't factor in at the moment. What about factoring in the shenanigans in Washington? We now have a Speaker of the House finally, but at what point do investors start pricing in a long, drawn-out debt ceiling fight that could very well take us to an extended shutdown that would rival the likes of what we saw in 2011, 2013, 2018, perhaps even worse?
Well, this goes back to, I heard your previous interview, the known unknowns. This is a known unknown, the debt limit. This is going to be top of mind. And what I'm worried about is not that markets react. I'm worried that markets don't react until it's too late. I mean, I think investors have become inured to the possibility of a potential default. We've seen this movie before, investors are thinking, and every time you get down to the end, the lawmaker comes through and passes a piece of legislation to increase the debt limit. Well, if markets don't react, thinking that we're in the same movie, then I'm not sure lawmakers are going to make the right decision here, and we actually do breach the debt limit, and of course that would be catastrophic. We go into recession. So if you're looking for a scenario for recession, that's it. I mean, if we breach the debt limit and someone doesn't get paid in a timely way, whether that be a bondholder, Social Security recipient, or someone in the military, I think we're going into recession.
And of course, it's not even just about getting paid. I mean, even just the prospect, of course, we know when we saw the AAA rating sort of get cut, it was basically on the idea that we were headed down that path. I know everyone keeps saying that, okay, this is 9 months out, maybe in the best case scenario, maybe even longer than that, with the Treasury having all those tricks up its sleeves. But I do wonder, Mark, that if this does get deeper into the spring and maybe into the early summer, whether we start to see, I guess, maybe potentially folks like Moody's, S&P, elsewhere start to take a look at the government's credit rating.
Yeah, of course, I can't comment on the rating. I'm not directly related to that whatsoever. You saw what S&P did back in 2011. They downgraded, right? And it was around, to your point, even though there was no breach of the debt limit, it was around the governance, around the dysfunction. And it feels like the dysfunction is meaningfully higher today than it was back 10 years ago, and it's only going to intensify. So, yeah, you can connect the dots for yourself.
You talked about how you fear that markets won't react. Would consumers, do you think, react in any way or anticipate that the dysfunction in the House of Representatives will extend to the economy overall and how they respond?
I doubt it, Scarlett. I don't think so. I don't think they're focused on it until markets are focused on it, until stock prices are down, until you have a TARP moment. Remember TARP? when Congress didn't vote for the $700 billion bailout, that ultimately they did, because when they didn't, the markets just lost it, and the financial system cratered. That's the kind of thing that that's when consumers notice, and that's when you go, they pull back and you go into recession. So I don't think consumers are gonna lead the way here. It's got to be investors saying to lawmakers, "Hey guys."
All right, so U.S. dollars going down. Everything else looks stable. These guys are having a good discussion. Very good discussion. So higher for longer. So they need to slow the economy down. They don't want to slow it down too much. The economy is strong, so they don't see a big recession. But then, because the economy is strong, that can cause more inflation. So it's a very complex situation. And a lot of economists with like advanced PhDs and stuff are having trouble coming up with consensus. It's really hard to tell. When you're in the heat of it, it's hard to tell. But when you look back a month or two, you're like, well, that was obvious. It's really hard to tell. Let me look at my plays here. Oops. Okay, what's CNBC up to? Housing?
Yesterday, John, who said in her 40 years of working in that town, she had never seen this little inventory on the market. The other number that jumps out to me is the fact that same exactly.
Let me see something. There was... I was wondering if I should have a feed of them. I don't know if they're good analysts. I think they have a live feed, right? I thought they had a live feed.
Yeah, I think the lack of inventory, Kelly,
Oh, they don't?
a real challenge. There's only about 3.2 months of existing home inventory on the market. That constitutes 90% of total inventory. So without that inventory out there,
Yeah, I doubt they did. They're not that big of a firm, right? So Lulu is losing a little bit. That's fine. My plan with Lulu is very specific. If we rally, then I take the profit from this and I hold this.
Yeah, sure. So I would say, though, the stocks have done incredibly well since June. They've outperformed the market by about 30%. So there's been a pretty big snapback off of the bottom. To your point, though, we have buys on many of the builders, and I think that if the stocks do in fact work, they're all going to...
And this one expires in May, so that's a long time.
I think that there will be some differentiation as the year progresses. Now, D.R. Horton is our top pick. They are the largest builder by volume by a margin of about 20%. They're focused on that right part.
Very bearish.
Talking about the entry-level first-time buyer that is so need-based and very consistent executor.
All right, John, thank you very much. We appreciate your insights as always, John Lavala. Appreciate it.
Thanks for having me.
Still to come, conserving space. We'll take a look at one startup trying to make
Caterpillar's looking better. Okay. These ones I could have closed for really good profit. This one I think it was near 20 cents. I blew it on some of these. I had some good kind of closes I could have done. Where's the Amazon one? I had one for Amazon that was pretty good. Yeah, this one I could have closed it at like over 100, 120. But yeah, if they sell off, they'll be good. Apple short strangle is looking better. It was struggling earlier. The price went up too high. I almost rolled up my puts. Okay, what do we got? What's happening with the prices? MicroStrategy is looking better. Lulu. This one's actually entering positive territory, eh? I could start closing the ones that get close. Maybe a little bit higher on this. It is negative theta though. I think I take this, 80 bucks. Baba. Alright, Netflix. Yeah, everything's looking decent. Could be better, could be worse. I'm okay with this. Tesla's pumping. Where's Silvergate? Silvergate stabilized. The dollar still goes down. Biogen went up. Nice. I got another couple of hundred in my net value. Things are looking up now. I was sweating this morning and Friday. Gotta be patient and you gotta stay sharp. You can't lose focus and start making blunders. You don't want to make unforced errors. You want things to happen because you got a little bit unlucky. You don't want things to happen because you fucked up. That's the worst. When you play with options, it's so easy to mess up. That's why you want to try and risk a small amount for each trade until you're comfortable enough with the risks. And usually you get to that level after like 6 months to a year. Because even a small position could end up with big losses, right? So then you learn about the risks of any position. Chill music. Bear put. Let me check Twitter, see if there's anything happening. All right, what's happening now? Let's take a look at the charts. Numbers are confusing sometimes. Charts are good to see. So let me look at the funds, what the funds are saying. Looking bullish. This went down by 5 basis points, eh? Crazy. Two-year yield is down too by 7 basis points. You can always trade these two. Small nominal value. These ones got pumped, didn't they? It looks like markets might be pumping here, but it doesn't look like it. Just a little bit from today. Let's see how much on the MNQ. 1.7%. Crazy. At the peak, it was 2.5%. Crazy. And then what do we got? Sectors. Options. These are not options, okay. Take a look at some of these here. US dollar is dumping. It's bad for me, but it's working out. Biogen is going up, which is good for me. I need, how's the cyclicals doing? The healthcare. Healthcare got a bounce, eh? Yeah, looks like healthcare got a bounce, which is also helping with Biogen. Silvergate is down. Financials are only up 0.17 though. That's not helping. Two-year yield slide. Let's see what he says.
Your 16 delta triangle, your one standard deviation. And when the short end starts to turn lower and the market driven by that nervousness, you really need to pay attention. Let's move down the curve to a 10-year. Currently in place for lowest yield close in 3 weeks. However, anything under 341 would be the lowest yield close since mid-September. Now I know we're a bit away from that.
341. Getting close.
Off that support level in the low to mid 340s, we're getting very close to retesting it again.
That would be bullish.
348 to 350 is considered a big pivot by the technicians trading 10-year, and finally the dollar index. Boy, it's gone from darling to dark future in a very quick amount of time. Look at this chart. We're on pace for a 6-month low close. Kelly, back to you.
Wow, so many counter-trend movements here, echoing what Bob said. Rick, thanks. Oil is closing for the day. What's its trend look like? Let's ask Pippa Stevens. Pippa?
Take a look at oil.
Oil is getting a lift today as China reopens borders, prompting optimism around its demand.
Wow, it went from up 4% to up 1.6%. 2.45. Natural gas, yeah. I was gonna buy a call spread. Imagine if I would have bought it. But it also retraced. Everything that pumped today retraced. Everything. Except for dollar. I think dollar is the only thing that didn't retrace. I guess a little bit. Yeah. Tiny bit.
One notable mover is SLB, formerly Schlumberger, hitting a more than 4-year high. Kelly?
They're not Schlumberger anymore? Oh.
No, they're SLB.
Come on. Who is it? EY, SLB, AB. We have all these acronyms. We've lost something. Pippa, thanks very much. Pippa Stevens. President Biden landing in Mexico last night for his first trip to the country since being inaugurated. Joined Canadian Prime Minister Justin Trudeau and Mexico's President Andrés Manuel López Obrador for a summit of the three North American neighbors. Now, this marks the first time a U.S. president has visited Mexico since Obama's trip in 2014. For more on the implications and an update on the situation in Brazil, we're joined by Fred Kemp, President and CEO of the Atlantic Council. Fred, what are you watching? It's great to see you again.
Great to see you, Kelly. Well, I'm really watching. There is a change of globalization. Some people talk about it as deglobalization, but it's just really a changing of supply chains. And what Janet Yellen, Secretary of Treasury, said at the Atlantic Council was friendshoring or nearshoring. Well, that makes Mexico a lot more important. And so last year, a lot of Americans don't actually realize this, but last year, America passed China as the #1 trading partner of the United States. They have a lot of manufacturing capability around automobiles. And the real question is, can we fix immigration systems? Can we fix some of the violence in Mexico or help? Can they build some of the infrastructure that China has so that this story of U.S.-Mexican trade, and obviously Canada as well, this is going to be a North American Leader Summit, can be one of the great success stories. We just don't concentrate enough on our own region and our own neighbors. So this could be a good news story.
So let's talk a little bit about immigration. The president yesterday going to the border for, shockingly to me, the first time during his presidency. Is there a solution there that you see, Fred, that can be worked out? And if so, what is it?
Well, that's a really good question. And the answer is there is no simple solution, but there has to be something that moves things further along from where they are right now. We're told at 6 p.m. The president is going to be meeting with President López Obrador of Mexico. And top on the Mexican president's list is going to be a discussion of taking on the root causes of migration. And that, of course, is economic development. It's creating jobs. To a certain extent, it's also criminal crackdown. The Mexicans seem to be willing to take more returns of immigrants. And so I think it's being, we have a 1.6 million person backlog with immigrants. And so a lot of people, thousands and thousands of people are crossing the border because they think that it's going to take so long for them to be processed that they're going to end up being American residents. So the president wants to fix that part of it, bring in more people who are truly under threat from Venezuela, from Haiti, from Cuba, and be able to turn back the people that are not legitimate.
Do we know, Fred, and forgive me for not knowing, I should know this, the percentage roughly of those people who are coming across the southern border who are Mexican as opposed to Nicaraguan, Venezuela?
Looks like we're selling off, eh? Is this the reversal? What if this is the reversal that everyone wants? All the bears. What can I do with the NQ though? Let's go to March, see what's available.
I'm also curious, as we're talking about how we didn't have this summit even during the Trump years, and this trend of friendship.
What if I do something crazy?
That's quite a loaded term.
Like 9,000, 10,000.
Bigger context for us. How could that complicate?
That's crazy. Why would you do that to yourself? I can always do this. That's expensive though. Holy shit, I'm just curious how expensive that is. Let's take a look. Okay. Can't even buy it? I don't even see the buy button. It's probably more expensive than what I can afford. No, actually it's not. It's only this much. Only, quote unquote.
So I think what you'll see is this playing out. Just very briefly, I think what it underscores.
It's risky because if we sell off, and you end up naked holding that. I mean, if we rally, right? How much is this? 496 for 500. Wow. But the thing is that it's like if we rally. Oh, you're getting paid for this, are you? No, you're paying extra. No, you shouldn't pay extra. That's weird. Wait a second. You're paying them money, so it should be less. Right? Or no? I need to learn the value of interest in options. You pay more for calls or for puts when you buy options. But this is a spread, so I'm not sure. So the idea is you wait for a big rally and then you sell one of these. But how much is, I'm wondering how much is one single call? Because let's say, how much is this call? Because what's going to happen is if we get all the way there and I take the profit on the short leg, I'll be stuck with one of these and I'll be responsible for that value, right? So I'll be responsible for 13,000. I got scared. I saw the 218,000 and I'm like, wait a second. That's what I'm going to be responsible for? That's a lot. But 13,000 is still a lot, right? Considering that it expires in March and that I can potentially lose all that, right? So I don't see. I don't see why I would want to do that.
Into a skewed iron fly where the put spread is
Wait a second.
is less.
Okay. Rioters. Okay. Let's go to music. So I don't want to open any position like that right now. I'll wait till I take more risk off and I'm ready to take risk on. I just need to chill. I opened so many positions last week. I need them to start turning green. And I do see a trend. More and more green appearing on my screen. But I do need some other tickers to cooperate and start taking off winners before I start adding risks, right? I can close this now for a penny. No, actually, no, Bido, I can't even close it. Okay, things are starting to cooperate. The good thing about like premium selling strategies is that time is to your advantage. If you can survive days and days, then over time, your positions are more likely to be in your favor. So, but the key is what kind of short premium, right? If it's a short call and you're near at the money, there is so much extrinsic value in the option pricing that time decay is not going to do anything. And then your deltas are so high that you risk more money per movement of the shares, right? Of the price of the stock. So, but if you have a ratio spread, even if you get to add the money, like this guy I'm basically $3 from, well, this is the long leg of the call ratio spread, but the actual break even is further out. So that means technically this is not at the money because the break even is 270, right? But it is in some ways at the money because you've reached the area where the strikes are, right? But you're not even struggling that much. Whereas a short put without any spread, you're more at risk here. So it's risky. And yeah, overall not bad. It hasn't been too much of an eventful day, But it's been a good day, I think. I did some good trades. I realized some gains as opposed to like Friday and Thursday. I was realizing losses. And a lot of small winners. And the NQ play was good. I was scared of like a violent rally upwards, and we got a decent one. I woke up late, and when I woke up, I was like, damn, this one contract's a winner, but everything else, a lot of other things were losers. But then, I don't know, I just got a feel for it, and I thought, you know what? This looked like a bull flag, but then we broke down, right? So I'm like, maybe we're gonna go back to a bearish trend, right? Let's look at like different charts. Let me go to the SPX. SPX is oftentimes better to chart. I want to take a look at some levels here, just to picture myself. I've been looking at the NQ for so long that I'm disoriented. How come these charts look so ugly? Why are these candles like in different sizes? Fucking software, sir. And you see, I can't even make it bigger than what I want. It's so shitty. Let's go 2 weeks. Okay. So yeah, we're above a lot of the levels we've been at. We're at 2-week highs, but we're trending downwards, right? Let me look at SPY so that I can see VWAP. We're way below VWAP right now. Okay, let's go back to the SPX. Hold up. You can hide such things as oh, I see. So let's see here. So 2 weeks, let's go to 1 month, 8 hours. So let's look at this level here. What is this? Wish, there we go. That's a good way to do it, okay. So, what are some key levels that you see? This is 1 month, right? Maybe I'll draw a Fibonacci. See what the Fibonacci gives us. Okay. So, we're like in a Fibonacci range here, between 38 and 50% retracement. So we might stay around here, we might break down, and it's crazy how we gapped up, man. Look at this, we gapped up just through this range, like crazy. And we tried to do it also here on the 21st and failed, but we made it to this range, and we even passed the next range, but then we retraced down. So like, I think the market wants to make it here and above, but it's going to be hard, I think. There's a lot of different variables. I think the main thing, though, it's going to be the taller selling off. It's going to be the speech and CPI. I think CPI is going to come in as bullish, maybe. So maybe I should keep those calls. I don't know. If CPI is bullish, I'm gonna buy shares of like companies. I'm gonna buy like shares of Apple and companies that I think will have high beta with the markets going upwards, instead of doing a call. And then I'll set up one of those call spreads or put spreads, bullish put spreads. I want markets to make it to an extreme, like an upward extreme. Like an extreme that nobody expected, like 43, 4400, where all the bears lose hope and all the bulls are like euphoric, and then start opening those NQ put spreads. Just a few of them. Don't want to risk too much. And then if the price goes up, sell the put, short put, and then wait for the reversal down. I think that's kind of a play that I would need to think long-term strategically. Like, I always look at things in a 40-day, 45-day time frame, but for those, I would need to look at it more like a 100-day time frame. And the thing is that when you're used to selling premium, usually you want time decay, right? And it's hard for a person who's used to making money through time decay to try and make money through, like, you know, going short theta and hoping for the price to move in your direction, right? But if you can hit one or two of those a year as well as your theta, I think you can improve your gains by like magnitudes better, right? So it might be worth it to just slowly, as we move in a direction, start thinking about like strategic, longer term, counter trend moves to make money off of a big move to the opposite direction, right? And you got to be patient enough to hold it through and not take the profit early, which is my weakness. If I see $500, I'm like, damn, I want that. But the hardest part is patience, because you're just sitting there looking at charts, looking at your screen, following the macros, and you want to do stuff. You want to be like, I don't want to be late, I want to get in early on the play, but then you get in like a month early, where you should have waited too early. SPX is, let me look at the regular chart. I'm confused. Like, what's happening? Oh yeah, SPX is bearish as heck. Why is the dollar struggling? Dollar's not correlating. It doesn't hurt to keep it. That means if I want to strategically go long something, I can. Like, there are certain things that have value, right? Damn, that's a loud car. Like, I can open like some ETF that I know will pay me something, you know, like a dividend or something. I can buy like T-bills, right? $404, nice. I think it's all right. I think I'm fairly balanced. If all things lead to a higher gain, I feel like I'm balanced. The car traffic is loud. I live in a loud area, kind of. Busy street. Looks like it tried to sell off past 39.11, eh? Crazy. So, I want to see how the NASDAQ is doing. This is like resistance, eh? Let me take a look here. The 1 month chart was nice. I like how everything aligned here. So what else do we have? What other kind of levels? That's a key level, but that's already a Fibonacci area. 3850. I guess 3810, this area is a key support area. We keep bouncing off of here. And this is the ultimate level for the past month. We have been lower. If we do a 6-month chart, we'll see a lot lower. Maybe do a double Fibonacci. It's going to be confusing as heck. Yeah, it's too similar, too confusing. Oh shit, I did put it, and I messed it up too. Okay, good thing that works. I'm not a good chartist. See, I can't even see what's to the right. Like, I gotta figure out how to use this software properly. Because I want to set it so that I can see where it's going, right? I can't even rotate this because it's so far out. Whatever. It's just confusing. Honestly, to me, it's like time you could be spending looking at fundamentals, looking at, you know, valuations and multiples and cash flow statements. All the time you spend drawing lines on charts. So SPX down, US dollar down, Silvergate down. Silvergate down is not good for me. I think the broader market selling off is bad for me, but that's why I'm positioned to make money off of any sell-off in a lot of my positioning. Like even Netflix, if it ends the month down, I'm probably gonna be good. Damn, it's selling off hard. The dollar and the SPX, like they're selling off together. I don't see how this is happening. So weird. SPX is selling off, but so is the dollar. I wonder if at this rate you try something with the SPX. We still have an hour, but no, an hour is not long enough. But it would be cheap though to open one. Last week I made some mistakes on SPX and I regretted opening anything. It's looking pretty bearish. But I already have so much downside. 3880. I feel like some news hit and things are bearish for something, for some reason. There's a full hour left, and this is literally $30 to open. Only $30. Considering that I've realized a lot of gains. Let's see what happens. See what happens. It's only 20 points out. I've seen 20-point moves in like an instant. But now that I'm gonna look at it, it's gonna stop moving. if we get a huge dollar pump out of nowhere, then it's possible that we get a huge sell-off at the end of the day. Or the main thing that would cause this to pay off is some kind of like bad news story. You know, like I don't know, some kind of bank issue, credit issue. Probably came in too late, as per usual. Too late for the trade. It's only 30 bucks. I mean, even if it doesn't go down, I can always close it for like a $10 loss or something, $20 loss. Okay, so power hour started a minute ago. The weak dollar is definitely not helping here. If the dollar is so weak, then where's the money going if it's not going into stocks? Going up instead of down. Let's see if there's any news on SI. Latest. It could get worse, but not for preferreds. This is interesting. I kind of want to maybe read this. Okay, so new notification. Who is this? November consumer credit up 7.1%. Revolving credit up 16.9%. Non-revolving credit up. That's a lot of up credit, eh? That means debt. Imagine asking the Federal Reserve a question like that. Okay. So, yeah, dollar's pumping. Maybe we see a sell-off, and maybe I finally print a win on SPX. SPX has been a pain in the ass. Let's take a look here. What is this?
This is what we got, folks. This is our SPX forward-looking curve. Gives you an idea of where to expect some volatility over the next couple of weeks. I only have up until the end of February here, but you can see the vol point for the DC CPI.
This is good. 404.1. This day's ending up well.
These have been some of the more volatile days over the past year. We got
Let's go. Dump it. Dump it so that I can make some profit for once. Just do it once, man. I've tried so many times on SPX that it always never works.
December 13th was one of the last ones that we had, and then November like 10th or something like that, and October 13th, like somewhere around there. They're usually around this second week of the month. They've been really volatile. So I'm curious to know, is this going to be a trend that we're going to see for another couple of months? As long as inflation / potential.
So this is the forward curve.
Or is this thing going to start to calm down? We have FOMC coming up too. That's going to be the 1st of December, and then we got the January payrolls on February 3rd. So those are the next couple of big events over the next few weeks. We'll see what happens.
This is interesting.
Let's move to the next slide.
That's the volatility forward curve.
I told you guys, I'm going to be coaching a basketball team.
All right. Oh, I got a bounce. Damn it. Dollar got a dump too. But this is bouncing.
Well, Sarah, first of all, I think what happened, what you saw this holiday season is, as anticipated, the consumer came out guns blazing, spent heavily during the gift periods. But what Jeff Gannett pointed out and others have done as well is that in between those gift-giving moments, the week before Christmas being important, Cyber Monday being important, all those peak giving periods were very, very strong. But in between, when consumers tend to buy for themselves, that weakened. And that's a bad sign for the longer term, because obviously we don't have the holiday spending momentum to carry us into January, February, and March. So I think that's what
Yeah.
I think that's why the warnings have been out there, not just by me, but by others as well. Lululemon, you pointed out, and others.
Lululemon 298. Does that mean my put spread is winning? It is. Holy shit. My put spread is up $60. Wow. That's crazy good. That was instant drop. Bearish. And I have that till May. Let's go. I want to see it dump. Dollar's pumping. That's good. See what they say.
Okay, we'll ask her. She's joining us in
That's some other
just a
stuff.
few minutes. All right, well, tune in. You know you can call in, Romaine. We'll let you. Yeah, long time listener, first time caller, Romaine. All right.
Romaine from Massapequa.
That is going to do it for our cross-platform.
They're funny. The Bloomberg guys are funny.
Back again live on TV, radio, and YouTube. And
Way funnier than CNBC.
2 to 5 p.m. streaming on Quick Take. And of course, at 4.
Okay, let's see Lululemon. Dollar's pumping. Let's dump this. Dump it so that I can take my profits. Down you go. Just flush. Flush and pump the USD at the same time. I want that to happen right now. Silvergate here. These ones are not looking great, but the IV went down. It seems. Yeah, or Theta. It's Theta. Theta decay is hurting those options holders.
That's right. You're not, but obviously Lululemon's not a department store. So
But that's a more. I mean, they still raised their revenue guidance. They just warned on margins. They're still growing 20 to 30% a quarter.
Well, I think what the Macy's argument was is that their inventory is actually in very, very good shape. We're well below 2019, as well as that's critical. So there was a tremendous amount of top-line growth driven by promotion by many of the retailers who had too much inventory going into the fourth quarter. The key question is, what do those inventories look like going into the first quarter, January, February, March, April, into this coming year? Because if the inventories are still heavy, over expectations, if the inventory is higher than last year on a relative basis to their sales expectations versus last year in the first quarter, that's where I see a problem with margins. I think others are getting their inventory in position, and they're going to protect their margins. I think the margins are actually going to be okay with those retailers.
Understood. Terry, it's very valuable having someone who's been in the chair join us to talk through some of these points. Appreciate it. Terry Longer, over to you.
Alright, looks like we don't want to drop below 3,900. It was a strong support. But if we did, it would have probably been a violent drop. Like at least 20 plus points because of it breaking support. Let's take a look here. It's far out of the money though. It's a big drop to do in an hour. So it's unlikely. That's why it was only 30 bucks, right? You would have needed some kind of news story. At least the dollar's going up. That's good. What else is there? There's Tesla, 120. Coinbase, Netflix, 360. Netflix is pretty high, eh? I can always do something crazy on Netflix. Another crazy bearish play, but I feel like I'm bearish enough with minus 18 SPX delta. No, I don't like this. I'm only gonna have one or two of these kinds of position on at once, not more. And Lulu, I could almost even just take the profit as is. I want to look and see here what's the theta's probably negative here. Yeah, negative theta. This is a pure like directional play. These could even be open as types of calendars too. Oh, it's going down a bit. That's good, isn't it? Hold on. Where's my position? It's up $3. What are we gonna get out of it? 38.99? Are we dumping? Is it happening? Where's the USD? USD's pumping. SPX at its lows. Let's have a straight dump to 38.50. Let's close the gap. Get a huge pump in the USD. This is going to take a nice dump. And yeah, so far so good. Can't complain about a daily P&L in 4 digits. After the week I had. Is it going down, really? I can take a small profit already. But I want it to go down more. I want to see a real dump. I want US dollar to pump. What's going on? Investors pile into Tesla? Really? The price is going down though. Okay, looks like I can take $20 now. I want to see a real dump. There's still 45 minutes. The day's not over. I want dollar to make it back to the high of the day area. And SPX to just go down a touch to like here. It's asking for a lot though. I went back down. I went back down by a lot, eh? Even just a few dollars makes a huge difference here. Just like one small wick and you lose half of your profits. It's so volatile. No wonder people play these. You know what? 45 minutes is a long time. Time is to my advantage here because you only need a tiny move and it literally you can get that move in 5 seconds and you have 45 minutes and markets are jittery. This is the second week of the year and the first day of the second week of the year, and I think markets want to like set a tone. And you see, we're gonna start going negative. I think once we go negative, that might be some kind of, hey, the Dow Jones has been negative the whole time. Some kind of like push downwards if we can get negative. Some kind of SPX is 0.07. It's gonna push it down further. Maybe markets want to set a tone, and the way they do that is by making sure we don't have a green day, right? I don't know, a red candle, a bearish red candle. 30, 35. This needs to go higher. It doesn't want to do it. We're losing the gains. It's gonna counter trend. Alright, I'm gonna BRB.
I think, 14 days or so. Friday, a huge update. Today, shot higher, but look what happened. We got quite close to the gap, this gap right here, and then have been reversing. So kind of cool, kind of interesting what's going on. So the bulls sort of won by way of the breakout, but they certainly haven't followed through because we're frankly back inside that range on the ES. So still quite a mess. But the bears really have the harder job now because, in a way, all this stuff down here, this several weeks of activity, has become a pretty solid floor of support. So it's going to take something big. Now, I will mention, now obviously none of us know what Powell's going to say. Powell has had a tendency to do speeches which, in a nutshell, are, no, I really mean what I've said for the past year, honest. And then the market freaks out. On occasion, like the Brookings Institute held through the bulls a bone, but more often than not, he just tends to say, look, I'm not kidding, guys, and the market will freak. So if it was a really, really hawkish speech, I guess it could plow it.
The way I change currency is using futures. It's the best way because the fees are minuscule. And then it shows up here. So use the future pair for yours. I think it's CHF.USD. But if you're not sure, check with them. But this is what I think, the way. So you go here and you can buy and sell. This would be buying USD, I believe. Or selling, I don't know. Just check. Make sure you're doing it correctly. Like when I use this, if I buy, that's buying USD. If I sell, then it's selling USD. So you probably want to buy USD. You want to buy like however many you want. Then it's going to show up here. And then eventually there is a way to close FX balance. I forget how, but it's not hard to find. On the phone, it's easier to find. You can close FX officially outside of futures, right? But once you own the future, it's perpetual until you close it. You don't have to roll it. You know what I mean? It's not like a regular futures. Let's go back to SPX. Yeah, looks like I'm not making money off of this one. But it's fine. It was a fun gamble. Got my blood pumping for a minute there, and I almost made some cash. No worries, man.
Threatened, but it certainly hasn't like really broken yet, even though we've kind of teased with it and gotten below it from time to time, briefly. FXI, China has continued its rally. This rally's been almost uninterrupted here, as you can see, just up, 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 up. I still have my FXI puts. They expire Feb 17, I want to say. So there's still, you know, a goodly amount of time on them, but they're not doing well. I mean, they're down probably like 55% or something like that. But hanging on to them. We'll see if this can reverse or not. But yeah, those little puts have not had a good time of it. But the higher we go on this, you know, the more weighty I think that overhead supply becomes. I would also point out one Chinese stock in particular, which is, God bless it, actually managed to be read today, and on which I have puts also, is JD.com. As you can see, broadly speaking, this was the peak here, and we've had, you know, major lower high, lower high, lower high, and more recently, we've had this kind of right triangle pattern going on, whereby you've got this very steady horizontal that represents resistance. You can see here, 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 and then here. Strictly speaking, this should be a little bit higher. So we haven't been above that since, you know, way back in the day, I guess 10 months ago. And then when we do slide, we've been sliding nice and hard. So I'm happier with JD than I am with FXI for obvious reasons. I would also make mention that Apple, whose failure was a real canary in the coal mine, I think, for the NASDAQ to enter a new leg of weakness, had a strong rally today, but check out the dash line here. This is extraordinarily strong resistance. I mean, this is a who knows how many
I'm finally up month to date. Crazy. I was down earlier.
at these prices above that dasher
Up
these people are not happy.
couple of $100 month to date.
Cross their arms and just hang on forever.
Crazy.
A goodly portion of them wants
Finally.
and so as it approaches that, they will take advantage of that. And so
Take a look.
it's quite strong to look what's happening now. It's near
Take off the music. This guy has a lot of good insight. He's one of the best chartists.
this month. But now this case it might be early February when earnings come out. Apple's a pretty dominant.
Should I take the profit on Lulu? Lulu could go much lower, right? A lot of bearishness surrounding the stock. Crazy good trade, eh? I was reluctant to put it on.
I haven't been involved in gold until earlier today when I did acquire some March puts on GLD, which are slightly profitable at the moment. But to my view, this red trend line here, which failed, is an interesting resistance level.
What I can do now with Lulu, I was thinking about it. Hold on. I'll keep it on. What I can do with Lulu now is, actually I can sell downside because I have the downside put spread. So there's always the option to use that to my advantage and sell some kind of ratio. This thing is nominally it's so small that it's not worth it, right? And these are kind of too close to add the money. But then again, I have the put helping me, right? So I have the actual put spread helping me. So I can open this for like a 3 lot for an extra $100. And if it makes it there gradually, then it's good because I'll win from both. If it makes it there fast, I'll win big from the spread, but I'll start losing from the small amounts, right? So I think it's good. How much buying power? 3,400? Okay, I'll take it, but I gotta be careful. I can't open that many more positions now that I have that too. Can't believe I have 3 Lulu positions. Nuts.
Eroding down below that line, but if it does begin to rally, that would definitely melt the precious metals. Just by way of the ETFs here, GLD, as I mentioned, got puts on this.
Another Lulu? Damn it.
Resistance 175.03, and there's SLP, which I got out on Wednesday and Thursday of last week. And here you can see a nice steady declination, if that's a word, of prices like so.
What's Lulu at? 297.01? Average price. 52 IVR.
And in turn, some of the really battered smallish
14, it went up by 1.
but I don't think
Buying power.
we've got the bit farms here. And
I saw it earlier. What was it, like 74, 3,400?
these are, I think, just
95. I don't know why that changes. I gotta learn what the difference is.
which was at a lifetime low on Friday.
9,500? Really? Gotta double check that.
But Lord knows there's a lot of overhead.
That's crazy. I wasn't expecting that. And it's 3 lots. Okay, so I have downside. I have 3 positions in Lulu. It's getting complex. Tesla.
Even after hours, I don't think it got to below 100. But it is rallying, and that's fine. No position. I'm not going to have a position, but what I will say is that if it does fight and claw its way back up to this next level here, which is around just under 160, then I'll be very interested in the bearish position on this again, as it is now. It got very,
It's a good entry point.
About 2% away, and then it started zipping higher. So I'm just going to watch it from a distance. If it gets close to 150, 160, then it may be interesting again. All right, that's all the time I've got, but I'm glad this worked out more or less. And I will see you here tomorrow. And then if all goes well, I will escape the black hole and starting on Wednesday, be back in the pop-up video. So thanks for joining me. I'll see you tomorrow. Bye.
That guy's very insightful. I like it. So many ads, it's crazy. It's not working. There we go. $404.3. This is good. Happy that we're turning the corner on that little bad streak. Couple of days of bad streak. Like I said, time is to your favor here, so it helps. And the little day trades, sometimes they can help too, but sometimes it's best to avoid those. This keeps going down. Maybe I'll close BBB, BIIB, and just, you know, it's just like visually, I don't like seeing it. It's so far from being profitable. I don't know anything about the story. I've made enough gains of the day to justify closing it that I will learn from this mistake. Taking on something that I'm not familiar with in order to, you know, get some excitement out of it, it's not worth it. So now, that's fine. Only 186 loss for the day. I got rid of a horrible position from Friday. And now I have potentially a lot of gains coming up because we have the Iron Condor, which has a 5,000 max gain. If we end the month, so we have 11 days. I'm going to pull up the SPX here. So we have 11 days. And if we end up around here or lower, if we end up around here within 11 days, I'll be able to take a good chunk of that profit out, which would be nice, off the Iron Condor. And then we have all the short premium along Theta positions that can end up bringing the value of these options down, right? And making me profit. And then start closing some of these. These are going to expand in value as we get closer. Like this one here is worth an extra $17. And it's almost at negative theta. Still positive. Positive delta is good because this should be negative delta. We have Netflix, Baba. Baba has good potential. CRM's doing good. Apple Short Strangle is doing better. That wasn't doing as good earlier. Lulu, TLT, First Solar, Lulu, XOP, Amazon. All of these are basically worthless. I can close them, but I want them to flip and be worth like a good reward. Like this one flipped and it's worth an extra 60 on top of what I got for it. So this one might be worth taking, right? I'm looking for something like that. Oh, I guess what I gotta look for is positive market value. Let me see. Positive market value that indicates that it's flipped. That's a good way to find them. except for like a long call when it's not a ratio. This one's doing better. QQQ doing better. And these ones need to come down more in value. But you know what's funny? Because I can close these and then not have to worry about them anymore. This is basically the same amount of loss as the stupid Biogen play, almost, right? Biogen was a little bit better, but it's almost the same amount. But no, I think this play pans out. I think it's fine. It's only 4,000 shares if I have to acquire them. The big risks is if I have to acquire them at 5, right? So, because then that's 4,000 plus 12,000 shares. That's 16,000 shares. So, it's a bit much. Okay, where's the SPX at? Am I gonna win with that trade, or I didn't even pay attention? I needed to go down more. I forgot to look at it. Just dump it. End of day. Just send a signal to the world that you mean business. The US dollar should pump. That's gonna help. And then dump the SPX. It might happen, guys. Look, we're $8 away from this. Actually, $13 away from the strike. It's not a lot. Like, we just need like one push, like one nice push. See something about Moderna.
Now, small caps and mid caps teetering on the brink as well.
Oops.
Here's some pride.
Dollar is pumping. I want to see a bigger pump on the dollar. Dollar is pumping 93. Few more steps down. All we want is one big flush. Dollar's pumping. This dollar trend's been nice. I've been watching it from the beginning. 0.14%. Are we gonna get paid for this? Looks like it wants to go up now. Yeah, it wants to go up. Looks like we're not getting paid for this, but it's fine. 20 minutes left though. 18 minutes left until close, so you never know what happens. US dollar's going down. Tilray? I want to hear what he says. Apparently he's a clown.
On legalization, that's going to depend upon legalization. I don't see that happening anytime in the near future. So our strategy is to grow our businesses through acquisitions, through other categories with adjacencies. But listen, look at New York right now. Look at the lineups of the cannabis stores that have opened in New York. The demand is there. The want is there. Look how long it took for prohibition. So ultimately, I see a big opportunity, a big industry, and with Tilray, with its balance sheet, with its brands, with its technology, its innovation, its global footprint, we'll be there. It's just, hey, depending upon what, we'll be a diversified company into many categories.
Looks like IV went down a bit. It was at 5.3. Now it's 11.41 for Silvergate.
And absolutely, that's what I see today. You know, the cannabis business in Canada, you know, it's interesting. Over the last couple of years, we've paid over $220 million in taxes in Canada. So look what the governments are missing by not legalizing Canada. So the plan is to grow Canada, do other acquisitions in Canada in cannabis as consolidation. But the U.S. right now, the focus is on CPG. And yes, looking at some big
What's CPG? Canopy growth? I don't even know what that is.
looking at other opportunities in the beer and spirit space. And, you know, I don't mind the
I like the drinks.
you know, spirit companies, multiples out there and their margins. Same with Europe. I like Europe. I think the opportunities are going to be tremendous in Europe. You know, we got great infrastructure in Europe. We combined our European businesses, our CC Pharma, our cannabis business, and ultimately we're looking at other opportunities in Europe in the consumer package good industry that are adjacencies to the cannabis business. So once it is legalized, you know, we'll have that brand, we'll have the products, we'll have the know-how, and we'll ultimately be that global company.
Reminiscent of the Hain Celestial days on wellness and CPG. Erwin, thank you very much. Appreciate the time.
Thank you very much.
Erwin Simon, Tilray CEO. Up next, Canaccord Chief Marketing.
That was good. Apparently he always makes a clown of himself. So I wonder what people are going to say about that.
I was. Yeah, exactly. I go, man, I'm feeling good about myself. I got this. I am right now just about
a couple deltas long. We took a few things off yesterday, but
I'm very short.
I didn't add any new trades today. Did you add any new trades?
No, I didn't add any new trades. I didn't take anything off. Tesla was a little bit of a bucker today. I know the market was higher, but Tesla's kind of stayed higher. For me, that was my worst performing stock. Although volatility expanded early in there, it's contracted nicely down to 57 and change. It was actually a little bit lower just a moment ago. I mean, Ivy rank was a little bit lower. Tesla's my worst trade of the day, and got a couple of decent trades in Airbnb and Amazon and TLT a little bit, although I use TLT a little bit lower.
The problem with Tesla is that when Tesla goes higher, volatility doesn't.
Wait a second.
Yes, exactly.
So you're gonna make.
What the fuck was that?
Tesla with volatility when stock goes down, you're gonna lose money volatility when stock goes up.
Sure, premium.
Wait a second.
So Tesla is my biggest loser. Tesla and SMH are my two biggest losers today. Along with the Q.
SMH, that's on you because the market's stinking there.
Yeah.
Wait a second.
Tesla, SMH, the Q.
I'm short 100 shares of this for some reason.
Baba are my biggest.
Why am I short 100 shares of ARK?
Winners. We have a lot of them today.
This makes no sense. I'm gonna close that.
The biggest
I don't even know why that happened.
Robinhood.
Well, I was gonna say it's up 30 some odd cents, and you have long delta.
US dollar's going up. Oh shit, it's selling off. Let me check my SPX. 13 minutes, it's selling off.
And a couple of these cheaper stocks and like the yield
Wait. It's this one.
So there's a bunch of trades that worked.
It's not worth anything, but what if it sells off? The dollar's pumping. Dollar's pumping. It's going down. 91. Low of the day. It's going down, it seems. Dollar's even higher.
Oh, so I didn't tell you this because I was a little.
It's not printing though. It needs to go way lower. Fuck. Low of the day. 38.90. Selling off. I'm doing good with my P&L here. Let me do my screenshot early because I want to focus on that trade.
I'm going to be honest with everybody. So this weekend, I decided that I was going to change
Sport.
the blades on my Tesla.
I told you not to do it. I told you they're different.
I always forget.
So I watched on YouTube. I watched all the videos
Okay.
and determined that this is a piece of cake. A monkey could do this, okay? And I watched a guy change them on a Tesla.
Okay. Where's my position here? So I need it to be like 10 points lower, and I only have 11 minutes. That's impossible. It's too bad. $30 donated. But the dollar is pumping. Let me look at the Fed funds. These are still looking. Oh, this actually, they retraced by a lot. They retraced halfway. I wonder if it was that lady's speech during the interview. I think it was. Before that interview, I remember we were at the highs of the days. And then as soon as the interview started, the market reversed, right? With Nick Timmerhouse. So it looks like that's the story behind what happened today. But it's good though, because as soon as I sensed it, I sold the call. But you never know. It might go back up with force, and I might regret selling that call.
Relatively unchanged on the day for the S&P and the other major indices. The Nasdaq clinging to a 0.7% gain here. Some of the individual movers to keep an eye on. A lot of preliminary announcements for earnings already. Dexcom, big maker of glucose monitoring equipment, pre-announced today. Those shares down about 5%. And we get a few earnings tomorrow, including Bed Bath & Beyond and Albertsons, two companies, of course, that's not really trading on fundamentals right now. More about survival for Bed Bath & Beyond, and for Albertsons about that tie-up that it's been trying to orchestrate with Kroger. Jason Pride still with us, Scarlett.
Yeah, and he's the CIO for Private Wealth at Glenmead. So, Jason, I want to pick up on what Romain was just talking about when it comes to earnings. Just how low is the bar for fourth quarter results right now?
Well, I think, look, fourth quarter results are probably not the main contention that we have. It's actually the outlook for 2023 that we think is going to be the most important thing that actually comes out of the fourth quarter reports. As you're probably aware, when companies come about and they put out the
So yeah, it went back up. That's okay.
a piece of information that is what they're expecting your
US dollar though.
And we think this may be the beginning of the cycle for some downward revisions there as companies look ahead and they say, well, you know, rates are a lot higher. We still have inflationary pressures. Consumers are feeling a bit of that difficulty, and businesses are adjusting their own capital spending and employment plans. So we want to be a little bit conservative, set the bar a little bit lower for the coming year. You know, a lot of companies, you know, on average, the
So
S&P
I opened
500
two positions today. They were both Lulu.
pegged the S&P 500 at about, I think,
Short put spread, put ratio spread.
a share for the coming year. Strategists on the street, interestingly,
Can take the profit off of the short put spread, maybe.
15%, 10 to 15%
the put spread.
to earnings expectations based on those that are looking
Did
at
it bounce?
top-down perspective as opposed to a
No,
bottom-up
yeah, a little
perspective.
bit.
We expect those two to kind of
Oh
come
no, wait a
together,
second. That's another
as
one.
we go through 2023.
Yeah, real interesting though to see just how wide that gap is.
What's Lulu at? Oh, it bounced a bit, eh? So yeah. It was near $100.
Says Apple aims to actually drop its Broadcom chip by 2025 to use in-house design. We know Mark Gurman has been covering this story for quite some time on Apple's push to become a little bit more independent from some of the chip makers that have been relying on. Sit tight for just 1 second, Jason. We do want to dive into this story, and I think we have Mark Gurman already on the telephone line. Mark, what's actually behind this move here?
Thank you for having me. So this is about Apple trying to reduce its dependency and its reliance on outside suppliers. Over the last decade or so, you've seen Apple slowly design out some of the chip
7
makers,
minutes.
right? Samsung originally designed the main application processors in the iPhone and iPad. They've been Apple chips now for the better part of a decade. You saw starting in 2020, they moved away from Intel in Macs toward its own Apple silicon chips. They've done more custom silicon around the batteries, around the cameras. Next up is wireless chips. So Broadcom makes what's known as a combined Wi-Fi and Bluetooth module. This is how your phone connects to Wi-Fi. This is how your phone connects to your car or headphones over Bluetooth. Now Apple is starting to design its own component to replace Broadcom. They have been paying, you know, they have a $15 billion deal with Broadcom right now that expires at the end of this year. So this would replace Broadcom after that. The other big chip is the cellular modem. We've discussed on here for some time that Apple is going to design Qualcomm out of the iPhone after their bitter legal dispute a few years ago. That's happening as well, probably around the same time at the end of 24 or 25 with an Apple in-house modem.
All right, another great scoop out of Mark Gurman with Apple now pushing to replace the chips inside its devices with homegrown components, and of course that would affect Broadcom. The shares have been up 3% here on the day, now down in the red 1%. Of course, Apple, one of Broadcom's biggest customers. Still with us, Jason Pride, CIO for Private Wealth. And Jason, I want to talk about more broadly here some of the structural changes that we've been seeing in our economy and with a lot of these stocks like an Apple, if you will. The idea that the leadership that we came to know prior to the pandemic during the last bull market cycle may not necessarily be the leadership that we see whenever this new bull market cycle really sort of takes foot.
I wouldn't be surprised by that, Romain. And actually, I think your thought process is right there. And it's quite often what happens in a lot of cycles is we tend to see one leadership group be the driving force behind a prior cycle actually not reemerge, at least at the onset of the next cycle. We're probably going to go through again.
Might sell off actually. You never know. 5 minutes. Just need like one sharp candle.
What we're also seeing at the same time, this time around, kind of maybe a little bit similar to the 2000s, is a unwinding of excess valuations on the growth side or technology side of the spectrum of valuations. We saw throughout last year value stocks actually outperformed. They've continued to outperform even into this year. That gap between the two has actually shrunk a good degree, but it hasn't closed completely to its normal ranges. So there may be a little bit more left there. At some point in time, we'll probably see the market actually maybe even congeal in the next upcycle in a way that that we see more broad-based participation.
But at the same time, value stocks are kind of always changing depending on how the price earnings shakes out. At what point do some of those tech names that were once high flyers, were once growth names, become value stocks?
Absolutely, Scarlett. It's already happening. We're already seeing certain names slip into the value indexes. That's part of the way that you actually get that rebalancing and that rotation back into certain areas of the marketplace. It's more distinctive, like the last cycle, when you see entire sectors all focused in one area and entire other sectors all focused in value, and such great disparities between them that you have the opportunities that existed, say, at the end of 2021, and we saw play out through 2022. Now we're starting to see participation from different sectors show up in each of those growth and value indexes, which is arguably, I would say, eventually going to be a more healthy basis for the market, but probably, again, still a little bit more of that to go through on a near-term basis.
All right, Jason, always wonderful to catch up with you. Jason Pride there, the CIO for Private Wealth over at Glenmead, helping us count down to these closing bells. Just about 3 minutes to go here. We talk about, of course, Scarlett, their interesting scoop here and some of the individual movers. Qualcomm shares continuing to move lower, down about 1.6% here on the day. A lot of other names out there as well on the back foot.
Yeah, definitely. I look at some of the big movers in the S&P 500, and it's notable how many are healthcare names as well.
What do we have here? Take a look. USD is going up. This isn't going down. Alright, interesting. M&A?
That's why there's lottery tickets.
Absolutely. Here. Did you play Mega Millions? Isn't that top?
Lottery tickets, eh? M&As? Crazy. You don't want to be short when there's an M&A, apparently. It never happened to me, and I don't look forward to it. But it's a bad time to be short anything. And put the music on. It's 58. Okay, silver key is stable. Lunch break? Nice. I don't get a lunch break. I'm too busy. Alright, looks like today is going to end as a good day. I'm not going to get that pushed down, which is fine. And the day is going to end at overall a positive P&L. The dollar is going back up, which is really good. And everything is balancing out. The losses on these have become really small. Almost to the point where if I don't want them, I'll just take them off. So yeah, there we go. It's 1 o'clock. I made it. And I survived the day. It was a wild day though. But pretty good. Alright, I'm just going to check the bulletin and then I'm going to call it a day. But I hope everyone has a nice day. It was a crazy trading day for me. Salesforce data reveals $1.14 trillion. Wow, that's serious sales. Alright, I'm gonna head out now. Peace out, everyone. I'll be back tomorrow, and hopefully I don't wake up too late. Peace.